Welcome to the Traders Exclusive live strategy series for May 18th. I want to welcome you and thank you for showing up. We're going to be talking about building a probability-based mind from the survival-based mind, and that might sound complicated, but I'm pretty sure that it's very common sense and you're going to really enjoy it. How to become a target trader versus a scalper for way more pips, how to trade in a more controlled and relaxed manner, and how to pick market tops and bottoms. And that's with Randy Howell, Scott Barkley, Daniel Bustamante, and Simon Klein. And we also would like to point you to tradersexclusive.com, where we regularly post articles and video clips with valuable trading tips and techniques. And this is also where you're going to find a recording of today's webinar. So yes, this is going to be recorded. Not only will you get an email from GoToWebinar to let you know that it's ready to be viewed, but we'll also be loading it up at tradersexclusive.com, and I'll tell you how to find it there. And next up, we have the ever-present disclaimer. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not necessarily indicative of future results. We'd like you to please take some notes with a little bit of context and hold your questions until the presenter is done and asking for questions. And that would really be helpful, and that keeps a good train of thought going. Our first speaker up is Randy Howell of Traders State of Mind. He's talking to us about unlocking the hidden potential of your trading mind. Randy's been with us before. I really love it when he comes back, and he's a performance coach and a licensed therapist. His work focuses on using emotions to build an effective mind for the management of uncertainty. Randy's work is grounded in emotional intelligence, mindfulness, and developing latent potential in investors and traders. He teaches them how to harness emotions to achieve the performance edge so they can effectively control the mind that is brought into the moment of managing uncertainty rather than attempting to control the outcome. He's based in the United States. He teaches and trains internationally for the emotional finance community. His publications have appeared in many venues, and he is the author of the book, Mindful Trading, Mastering Your Emotions and the Inner Game. Welcome, Randy. I appreciate you coming back to be with us.
Thank you. It says I'm muted. Can you hear me?
I can hear you. You're unmuted now. Sorry about that. And now you're the presenter, so you should be able to share your screen.
I think we're doing that. We're making progress on it right now. Yep, we're there.
Perfect. All right, well, I'm going to mute my mic and step out. And if you need me for anything, just give me a little holler. I listen with an ear.
Okay, I like that. I hate it when they listen with their eyes. So I like it. I like it that you're listening with your ears.
No, I mean, well, I probably should say I listen with one ear. I keep the other ear doing something else.
Okay, now I got you. Well, thank you very much.
Thank you.
And I'd just take the opportunity to thank Traders Exclusive for this. It's a lot of fun. It's a lot of to me, it's something where you open this stuff up and suddenly people, they see the potential that draws you to trading. They can look at it and say, you know something, wow, just man, you size this thing up and wow, look at the money, the freedom I can have, the financial freedom, personal freedom. And then they say, okay, I'm ready. And besides that, you know something, I've got a winning attitude. Yet what we're going to discover really quickly, the mind that brought you success in the business world or the corporate world is not going to be the mind that brings you success in the trading world. So I know everybody can hear me. And with that, let's just go to the first slide. You know, everybody wants to win and they do not want to lose. They don't like taking that loss. And the reason is very simple. Our caveman ancestors, and even beyond that, they had to win in order to live another day. And if they took a loss, that loss was their life. And it just so happens that you carry that same brain, it's called the social mammalian brain, underneath that big, huge, thick thinking brain of yours. And what happens is it does not speak in thoughts, it emotes. And the thinking brain would not even know it's there. And interestingly, it's built for your survival in the moment. Failure means death to it. So if you're seeing a trade turn against you and it's heading toward that stop and you don't want to take that loss, you've already taken 2 or 3 or 4. What you're doing is you are triggering that ancient primitive caveman brain of yours, and it is fighting for its life. It doesn't know about money. It knows about life and death. So, from way back from caveman up until where we grew up and became Homo sapiens, and we became these really thinking creatures that the last time they saw a cave was a long time ago, you still are highly invested in winning, okay? And you're highly invested in not losing. That's the mind. Winning, not losing, and controlling outcome that has produced the kind of success. And then you get to trading. Guess what? All that winning formula there, it doesn't work. Suddenly, what you do is you discover you're stuck. You want to win, and what's very typical here for me is I work with traders, and these are people with sizable accounts, and they do stuff like that, and they've been alphas in their business career and done very well, thank you. They get into a trade, and then they open up their screens, and there they are, waiting and waiting and waiting and waiting, and they start getting bored. They say, you got to be trading to be doing something. You got to do, yeah, you got to be, you got to, and they start looking at other areas of their email there, and then they say, well, I'm just going to peek over here these other markets. They start seeing it, and they see something from that mind that's actionable. And before you know it, they're out of their chosen markets, they're into another market, and they're out of their trading plan looking for the dollars. They want to make money. And yet my promise to you, if you want to make money, you're going to find yourself stuck because you cannot control whether you make money or not. What you control is the mind you bring into the moment of performance. Okay, this would be the trader's state of mind. And this is a mind that doesn't really care whether or not it wins or loses. It cares that it performs well, because if it performs its strategy well, then probability is on your side. You keep losses small, you're allowed those profits to really magnify. And what you're doing is you're playing the game, and you're calming down the caveman brain's need to survive, needs to be able to provide food, and also not take losses because it's deadly. And you're calming that down, and you begin to have something else show up that we're going to be talking about. So the key here, all that knowledge, I can't tell you, have you ever got around a bunch of traders? And it's like listening to fishermen talking about the ones that got away, and they swap stories. They talk about knowledge and this and that and the other and other. And then ask them one question: are you profitable? Somewhere between 2 and 5% are. But most aren't. We have about a 3-year life cycle where you go in, you blow up your capital, and after a while you get out, or your spouse is so angry with you that you better get out. So the difference between knowing something and being able to do it is in the results. Your best friend is your trading account. It's telling you right off the board exactly what's going on with you. Because if you assume, the assumption that I make in my work is I am assuming that that trading account, that P&L statement is telling you how effective the beliefs that you're projecting onto the markets about your ability to manage uncertainty are being tested in the health of that account. And what happens is that your trading account doesn't care about the way you would like to exaggerate your victories. It's harsh. It's a truth meter. But what it's doing, it's telling you whether or not the beliefs that you inherited from way before trading are now, if they're effective in the management of probability rather than the management of certainty, making something happen. So we get here, and we have a fundamental question here. What actually stands in your way? What actually stands in your way of becoming a highly effective trader that really doesn't distinguish between winning and losing? To a really highly effective trader, winning really only means that you landed on the right side of probability relative to you. And losing only means that you landed on the wrong side of probability relative to you. It has nothing to do with you, who you are as a person. It has everything to do with, can I maintain a performance mind that allows me, my psychology, to become the edge, the psychological edge that I need to drive the method edge that I have. The truth is most people simply don't have that psychological edge, and it's the last place that they ever look, usually way too late. So we're sitting here and we're going, well, what are you telling me? What do we think? First of all, let's take a look at, what does winning really mean? Okay. Winning is what it's all about. A few days ago, I'm in a car traveling, and I stop at a traffic light, and the tag right in front of me says, what does it say? I am a winner. I win. And I'm going, wow, it's all about winning. And so we wanted to, okay, I'm a winner. I'm going to go in. I have this attitude. I'm going to be able to dominate. I'm going to work hard. I'm going to have the right knowledge, and all that stuff together is going to produce victory. The other thing that the winning mindset is don't lose. I hate losing. I hate losing. And yet, it's really weird to me is that a really great trader has to become an exceptionally good loser. And yet, the trader coming in that hasn't evolved yet doesn't want to lose. The professional trader knows that he's going to be taking losses, and he wants to keep them small. It's part of the game. The other thing that the alpha wants is he wants to be right. He wants to be in control. And God forbid he doesn't want to be wrong. He wants all his predictions to always come right. And he's got the positive mental attitude. He's visualizing success. He's perfect. He's controlling your destiny. The problem with visualizing success as a tool is that when you put stress into that, the visualization breaks down. The same thing with affirmations. It goes good until the stress is there and it breaks down, and all of a sudden you're back there. So we've gotten this thing. There's also this winning attitude has these very self-evident things. You've got to be persistent. You can't give up. Even though you're losing like crazy, you're saying, I'm going to keep doing it. I'm going to keep doing it. I'm going to keep doing it. Single-mindedness. I'm nothing. This is the holy thing. I'm going to trade 12 hours a day if I had to. I'm not going to take breaks. And for whatever, you never give up. You're tough. And then you keep fighting until the fight is run. The old Teddy Roosevelt thing. And you've got to be hardworking. Friends, you don't necessarily question these assumptions. But yet, when you get into trading, these are turned around on you, and they cannot be trusted. They cannot be trusted. Matter of fact, working hard is pretty silly. The amount of physical labor you're going to do is done with your index finger. The other thing is that this isn't about deserving to win because you work hard. This is about because you can control your faculties that allows you to maintain a mind that can work under pressure. So you've been engaging in this, all these challenges, and you've got this setup, and that's what flows. And it has become so ingrained into particularly American culture, but I've discovered all over the world too, that you've got to be this winner, and it becomes ingrained, and it becomes circuitry. And suddenly you have a habit that's been formed. And the hardest thing that an alpha, usually very successful in other endeavors, business, comes in and he has his success ingrained, and he ends up blowing up accounts. He's got a habit that was formed that worked in one domain, say business, but that same habit, the way of doing things, when applied to trading, simply doesn't work. The habit is going to have to change in order for you to be able to make the transition from winning as an outcome in business and winning as a performance that allows you a greater opportunity for winning and in taking the losses when they come to. And we get here and understand on an instinctual level, this is literally what taking down a big mammoth was like many, many, many years ago. What you're noticing is that it's a whole group of people. This is a big effort. And what you also notice is that you need it because every part of that animal's using for the survival of your clan. And you also start noticing this, is that you better have self-preservation, survival in the moment. That's a big, dangerous animal. You know something, you better learn how to be powerful in a different way because you can't confront that animal up front. When you see these things, these are almost paramilitary strikes when they were actually hunting big beasts like this. They cut the tendons, they put them down so they couldn't hurt any more people than they had to. But the other thing that a person got out of this, a man would get out of something like this, is status. If he won, if he took down that big animal, he had great status and respect in the group. He also got first divvies to the females, which was a big deal. If you almost notice throughout evolution, the whole job, males are going to defend territory. They're going to attack subordinate males. And what happens is they want access to the females. That's how evolution, that's where the species moves forward. It still works with us. We want to be a winner. So we're getting here and we're going, okay, well, I'm beginning to see this thing. I'm seeing a lot of caveman in me. And the deal here is that the winner of a caveman survival is about literally the outcome and environment. When you come to the modern world, when you come to probability, that's going to get you into an enormous amount of trouble. And here it is. This very, very self-image of being a winner that you bring to trading, it doesn't work. And the real question is that, are you willing to change it? Are you willing to work with it to really change your neural circuitry to be able to form new beliefs about your capacity to deal with uncertainty? That is really the question. And here we go. This is where it begins. You know, your thing is okay, I've got an idea, I'm going to try it, I'm going to do it, I'm going to do it again, I'm going to again and again and again, I'm going to keep doing it, and finally you get to success. That doesn't work in trading. Actually, Albert Einstein once made the statement that, you know something, doing the same thing over and over again and expecting a different outcome is the definition of insanity. Well, I personally, humbly disagree with him. I believe that doing the same thing over and over again and not getting any results out of it is normal. You're just being a normal trader. If you keep doing the same thing, knowing that this is not working, knowing that you keep slamming into the same brick wall and you keep doing it, and it happens to all traders, until you begin to say, what's going on with my mind? You know, I thought I was just going to get a bunch of knowledge, work hard, and it was going to produce success. But now I'm realizing what this dude, Randy Howell, is telling me is that the very mind that I bring to trading is a roadblock to my success. Yes, that's what I'm telling you. So this is the big flaw is very simple, is that you cannot control outcome. Caveman is built to control environment, control outcome. He is built to make things happen, his survival, and he is built not to lose. And here you are, the very first thing, practically everybody in this room, when you're in the morning, when you're getting ready to training, what I almost hear every day when I'm talking with new traders in my practice is this: what's on your mind when you're getting ready to trade? I'm going to make some money today. Right there. Right there. He is declaring something that he has no control over. You're setting yourself up for a big failure. You don't have control over that, but the thing is you do have control over everything. So the very first thing is you're going to have to kind of deconstruct, demolish a lot of the winning attitudes that you have from other areas. I'm not saying that you have to give up those ideas, those ways of beings when you're interacting in other areas, but in trading, let's get real clear, is you don't control outcome. You control the mind you bring to performance. And if you're working with a really good trader trainer, he's going to teach you a strategy that gives him or her an edge in the markets, and that's what they're milking. But if you do not bring the mind built for probability management, you're not going to extract that edge. You're going to extract less money from the markets than you put back in. So now we've got it. And here's the deal. And this is from a really great basketball player. You can't win unless you learn how to lose. And yet, I work with very few traders who absolutely, I hate winning. I hate it. I'll do anything not to win. And because of that, what you do is you catch yourself in very dangerous situations because you're going to lose a lot, like in baseball. You know, if you think about it, if you hit 300, you actually get base hits 3 out of 10 times. You're losing 70% of the time, okay? And yet, if you hit 300 in baseball, you're going to be in the Hall of Fame. So the thing is what I'm asking you to do is truly begin to look and begin to say, what is it I need to change about myself? Okay? The very first thing is right here. Trying to make things happen. You know, is that alpha, if you're one of the alphas who really want to make things happen and you end up over trading and blowing up accounts, that's the whole point. You have to be able to look at that and say, oh, in another world, in another domain, making things happen really gave me an edge because a lot of people just sit on their seats and don't do anything. You know, a good alpha is going to be out there pushing. And it works well, but when you bring it here, the successful trader is biased to see what the markets will give and to lose very well. You're not trying to make things happen so much as you are learning to say, what will the market give me? Very, very alien way of understanding it. And this is the difference. This is the difference between the certainty-based mind that you brought and the probability-based mind that you're going to need to develop. And it's alien. I want to tell you something. It's unnatural, and you have to build it. But what I want you to do is you're looking at a certainty-based guy over on the left who says, I'm going to conquer that wave. And what you're seeing is that the wave doesn't care. The wave's just there, just like the markets. But he's trying to control it. On the other side, what you're seeing is a trader, a surfer who is working a wave and going, oh, look what the ocean is giving me. What a rush. Do you see the difference? Because it's going to make an enormous amount of difference in how you go about doing this. In the probability-based mind, you give up control over outcome. You know, there's just all sorts of data running around you. You're sitting there, and all stuff is there because you're moving from being a big fish in a small pond to being a minnow in a vast ocean. That's the difference. In this small little world that you lived in, yeah, you're the grouper there, okay? But all of a sudden, if you take that grouper and you put him into a much larger thing, you might find that grouper might find that, oh, there's lots of sharks, there's lots of dolphin, there's lots of other things that are there. And all of a sudden, he has to change strategy or he's not going to be around. So your brain and your adaptive psychology are locked into a pattern that's going to be self-limiting. And, you know, I think Nat Fitch Hahn said it really well. People have a hard time letting go of their suffering out of a fear of the unknown. They prefer suffering that is familiar. I see that all the time in working with traders. You know, the thing is, they're suffering. That's why they're seeing me. But when you actually say, well, you know, we need to start building a different way, they will do that for a while. They'll come back to the other way, and they keep thinking it's going to work. So the brain does not want to let go of the illusion of control. It comes from caveman and insists in maintaining the form of winner that brought him to the game. And this is what really has to begin to change, because you realize this is not working. And I personally want you to continue doing exactly what you're doing until you convince yourself that you're either winning, or you look at it and going, you know something, what I'm doing psychologically just is not allowing me to extract the edge that I have from my method. Okay. And so you recognize that it is time to change. There's something, the programming that has been successful for 6.5 million years as humans for winning just simply no longer works. You don't have to do that, but at the same time, it's just a matter of how much time, how much money you have, and where you want to take this, because ultimately people come down to saying, do I really want to sit here and bang my head? Am I going to have to, am I just going to keep doing the same thing over and over again, keep falling into the same pattern? Because understand, once a survival pattern is successful, gets wired into circuitry, it automatically starts firing when it sees another situation. So that's why, for instance, things they group is that people who have a hard time getting into trades because they keep looking for more confirmation, they're falling into a pattern that was successful. And understand, your emotional brain sees you not getting into the trade as success. If you don't get in the trade, you're not going to die. That's the way it sees it. So the question is, how long do you want to do that? The bang in the head, you can do it for as long as you want to. And at some moment, the question really becomes, I get it, Randy. I see that the kind of thinking, the certainty-based thinking, the winning thinking that I brought to trading isn't working. But how do I go about developing a probability-based mind? Glad you asked that. Let's take a look at it. The very first thing, number one, that we teach is emotional regulation. You recognize that an emotion is not a feeling state. It's not a psychological state. An emotion is a biological action potential that coordinates activity between the organism, the trader, and the environment, the markets. And understand that instinctual stuff, as soon as it starts getting risk, it's going to start moving toward fight flight. You have to train yourself to be able to regulate that emotion from when it fires to being able to stop its growth so that it doesn't hit a switch and become a feeling, chemistry in the body, altering perception. That's the deal here, friends. So the very first thing, and how do we do that at our place? We teach breathing as part of the emotion. We teach muscle tension as part of the emotion. And we teach in the diaphragmatic breathing, the bellows breathing, what you're doing is you're interrupting the way you go about firing up an emotion that feels threatened. And certainty will always threaten you, but you have to be able to retrain. And if you want to see this in action, take a mirror, better yet, take your smartphone and videotape yourself trading and do it on the head so that you're looking the tension in the jaws, the tension in the neck, the wide open eyes, the halting of breathing, the panting of breathing. You're looking at an emotion firing, and you're looking at it building strength about to railroad you out of town. Most people never see it. They don't understand that it started way back there. They didn't see themselves holding their breath. They didn't see the tension in their bodies. They didn't see that as part of an emotional hijacking and process. You have to learn that. You have to learn how to do the bellows breathing to be able to manage the intensity of the emotion so it just doesn't hijack you from the get-go. That's where it starts. From there, once you learn regulation, the problem with regulation is that it's completely necessary, yet it's not going to solve the problem. But what it does do, it gets you to the door of the mind. That's a big deal because most of you, when you're getting hijacked, you never get near the mind. You go, what happened? When the smoke clears, you go, I have no idea what just happened. In developing mindfulness, what you're really doing is we're saying, okay, in mindfulness, can you notice what you're noticing? And you discover a big, huge thing is that you and your thoughts and beliefs are not the same. And by the way, you are not having thoughts and beliefs. They're creating your experience. They have you. And in this particular case, what you're looking at is a dog and a human, and you're looking at the human walking down, and the mind is full, just thoughts running all over the place. Meanwhile, the dog walking down there is in the moment, here and now. If you're in that kind of state where you're having all these thoughts running around, you're either highly excited and looking for opportunity, or you're fearful and you're predicting doom. And most traders, they start predicting doom, they start predicting the fear, the anxiety, and what they do is they come and they set course into that area. So that's what you find. So we come there and we go, okay, we need this tool, mindfulness, to be able to step back out of thought, separate from it, and begin to realize a big, huge truth. Is the brain in modern neuroscience is a community of rival emotional programs that have duked it out to take control and to take the potential that you are and to lock it into a particular structure. It will not change until it's proven that that system, that style, that pattern no longer works. And what we do here, it's called, when we build the mind from the brain, suddenly those emotional programs are given thought, and the mind becomes more of a governing board. And what you discover very quickly is that how that mind got constructed, it comes out of, first of all, your genetic predisposition, evolutionary psychology. It comes out of your family of origin, your extended family, your community, the culture, and circumstances. The brain organizes that for short-term survival. What we're talking about is that, okay, that brain has constructed an organization of the self that is adapted to the environment. That becomes the programming that runs the mind. And my promise to you, it rarely is good for trading. So we're there. And this is what your brain was actually built for, okay? It's you know, the world 40, 50,000 years ago is a pretty dangerous place. There were big, huge bears like that. And in Europe, they had to kill them all. But the thing is, it's built for that instinctual certainty. And this is the caveman and brain and mind that you brought to trading. It's engineered for survival in the moment. Uncertainty means threat. And you think about it. You trade in uncertainty. So you're sitting there, unless you train yourself, evolve yourself, you're constantly triggering to fight flight in the presence of that. It shows up by aggressive trading or by not getting into trades or just all sorts of stuff. Now, once this thing gets built, what you discover is that the mind actually just simply starts going, you know something, I have various forces, and it's almost like in this governing committee of the mind, is you start having different factions vying for power. And one of those factions is what I call the inner critic. It's called critical voice in cognitive behavioral. And to be honest, in the Abrahamic religions, it is often referred to as Satan. But the thing is, what you're looking at, it's negative, it's judgmental, it's critical, and it's very tempting. And if you've ever jumped into trades you shouldn't be in, you know about temptation. If you know about, falling for the thing, you'll never make it, you'll never make it. And what you've got is, like on here, you've got some guy sitting there with a broadcast bullhorn right into your ear. You're never going to make it, you're never making it, you're just a loser, all you can do is lose. That's just one faction of the mind that has taken up way too much control. What we're looking to do is to start saying this default program isn't working. And what we need to do is to start listening to our good guy from Warren Buffett. A person who can't control or manage their emotions cannot manage their money. Okay? So what we're looking for, normal is fear and anger to be associated with probability. However, there are also different emotions can be groomed, can be nurtured to show up when you're facing uncertainty and risk. And the ones that we're focused on are discipline, courage, self-soothing, and impartiality. Fortunately, it can be learned. And in doing that, what you're doing, the performance mind lets go of the outcome and is focused on the moment. I mean, if this guy right here is snowboarding and skiing down huge mountains and he starts thinking about the particulars, he's in really serious trouble. To the performance mind, the past is gone. The future's not arrived. All there is this moment. That is the thing you can do. You can't control what's going to happen, but you can control the mind in charge of your performance. This is what we want. We don't want the historical mind to show up and manage uncertainty. We know how that looks. So what we're looking to do is to explore that. How do you go about bringing forward the empowered emotions, the discipline of a ruler, the courage of a warrior, the self-soothing of a caregiver, and the impartiality of a sage? How do you go about doing that? First of all, you're going to have to find ways of bringing those elements of your potential up into being. And in doing so, what you do is you begin to train it. You know, if you take a look at this photograph, you start realizing that you have to have leadership here. Okay, you have to have clear thinking to be able to say, how am I going to handle this? You have to have the courage to face a situation like that. And you also have to be able to calm your fears down. That's the point, is these are elements that you can manifest, you can nurture, and you can really make happen. But you have to decide this, and ultimately, you're going to have to master your own demons. They're not going to go away. The more you resist, the more they persist. So what you're looking at is, when you're actually looking at this, I hate losing, then what you need to be looking at is the demon behind losing, because losing is simply part of trading, and your job is to keep losses small. You don't magnify them by trying to win. And so here you are, you realize that my job really is about becoming self-master of myself. And in doing so, I'm no longer triggering with the same mind that I brought to trading. I've created a mind that works well with that event called probability and certainty. And the way I look at it is that this is something that can be built. Is you have the courage. Now, we use a number of different ways of doing it, from memory enrichment of actual memories where these things have occurred. We use symbolic representation where we're finding an image of George Washington on the Potomac, the Delaware, going to attack the Haitians, and you're doing this and discovering that this potential lives within you, but it got opted out and it didn't become a working part of your mind. And what you're learning to do is you're learning to have those qualities, to create them, pull them up so they're in working awareness rather than the awareness that you've brought to the game. Is it easy? No, it's not. A lot of people say, Randy, this is the hardest work I've ever done. But what I tell you is this. I tell you the words of Thomas Jefferson, the guy who had the idea for the United States. What he said is, eternal vigilance is the price of freedom. As a trader, you have to be doubly eternally vigilant to make sure that the right emotional programs, the right archetypes are present, creating the mind that you bring to trading. You've already seen the mind that you brought to trading. Now what we're doing is we want to manufacture, we want to cultivate this new mind that engages uncertainty from an empowered way, that really just looks at performance as what you can do to control and win. Winning at that time literally becomes landing on the wrong side of probability. On the right side of probability. Losing only becomes on the wrong side of probability. It's no longer torturing you from a caveman perspective. It's no longer torturing you from growing up in a highly competitive family where winning was everything. I worked at a hedge fund in London, and the guy had brought everybody in there. And he said, I want you to listen to this guy. What we have here is a number of Olympic athletes who are making very bad traders and very bad managers of money because they want to win. And they need to learn that what they want to do is they want to perform. Okay? So the question is, how do you become the change? Well, if this is the first time you've heard about me and seen me, I invite you to get my free ebook. You just simply go to my website. It's www.traderstateofmind.com. And what you do is you just go and get the free ebook. That way you begin to get a much more in-depth look at my work and how it's based and how it works. And then if you've done that, start looking at all my videos. I've got well over 200 videos on YouTube. I have no idea how many articles that you can access from my website. And people do Randy Howell weekends where, you know, that's their business. They like to listen and they like to explore this deeper. And then when you really come down to it, when you realize that what's going to really be required, you might want to read my book, Mindful Trading, to really get depth of what you're going to learn in my work. What happens, we have a group course coming up, and it teaches the fundamental skills that you're going to need to be able to transform that certainty-based mind that you brought to trading to the performance mind with probability that you need in trading. And it's interesting. It's 5 sessions with me over a period of 2 months. But the key is, they're groups. Yeah, they're groups, and you have access to a virtual classroom 24/7. And I can tell you is that most people walk away going, I had no idea this was going inside my brain, inside my mind. And it really opens their eyes to what they're going to have to do. And if you register early, and that would be by June 10, we'll get a free gift. It's the emotional regulation workshop that I did with professional traders. I'm not offering it to you because I want you to sign up for the course. I know that what happens is people wait to the last minute. They get in and they're overwhelmed because I expect you to have been working with materials for 2 or 3 weeks before the first class. So what we're doing is we're giving the thing to stimulate you to start early. Now, when you get there, like I said, it takes you through a process from understanding emotions to emotional regulation, mindfulness, understanding that destructive internal dialogue that goes on with you, creating the empowered mind, and recognizing that you can manage the struggle of uncertainty very differently. It's powerful. That's what I would encourage you to look at. And my individual courses for people who are darn well serious about this, it's highly comprehensive, very personal, and it gets into the meat of literally how you got organized from the get-go up and how we go about correcting it. It's powerful stuff, friends. And what I want to do is I want to invite you, and what I understand is this, is that you're not going to look at trading psychology as an area to develop in until you come to the moment where you've lost enough and you've squandered enough time that you have to start deciding, am I serious about becoming a trader? Not only do I have to have the skill sets of, a trading technology, but I also have to have a way of building the mind so that it can use that technology. That's what I teach, friends. I invite you to explore it, and I invite you to the course. And what I want to do is thank you for being here. I've had a really great time. And I'll tell you right now, I know that Scott Barkley is up next, and I'm going to tell you something. He's a good teacher. Okay, he's one of the few people that I would actually say, but he is a good teacher. He's a good man. So I thank you. And so Sherry, are you here?
I'm here, and I put your link up to the free ebook, and I figure everybody gets to your website, they'll be able to look around and take you up on your offer there. That's pretty phenomenal.
Well, thank you.
Thanks so much for being with us. I appreciate you being done right on time too.
We practice this. I have a producer who sits there and just makes me just hit the cues.
Well, at least you're cooperative.
Well, she's my wife too, so I kind of have to be.
Yeah. Well, we weren't going to tell everybody that. We just wanted everyone to know that you do what you're told. That's mean. I'm sorry.
Well, there's some flexibility in there.
Agreed.
But in terms of actually running this and making sure that we stay within the context that you need, that's what we're after.
I understand completely, and thank you so much, and thanks to Dolores as well. All right, folks. Now listen, does anybody have any questions? We have like 1 minute. And so if you need questions, how about we do this? How do they get in touch with you, Randy?
It's pretty simple. Just go to www.traderstateofmind and start exploring. And the other thing I would also recommend strongly is to go to the YouTube channel. Just type in Randy Howell. Don't go to Randy with a Y Howell. That's a bass fisherman. Go to Randy Howell, and what you'll do is that's where most people really dig into my work and start taking a look around.
Right.
And then they go back to the website, start exploring what my offerings are and stuff like that. But YouTube is we have thousands and thousands of subscribers there.
All right. Do you have a link on your website for your YouTube?
Do I have a link on my website? You know something?
YouTube.
That is such a great question, and I'm going, you know something? I don't think so. And I know that there is a link. I have videos embedded on my front page that when you go to the latest video, it will automatically take you to YouTube.
I must be having a little bit of a choke here on my internet because your whole page isn't loading for me. All right, guys, so you're going to have to do it the old-fashioned way where you go to youtube.com and you look for Rande, R-A-N-D-E, Howell, and you'll be able to get into his work and really, truly take advantage. We're getting so much good stuff from people being willing to come and talk to us for just a 45-minute window. It's awesome. Thank you so much, Randy.
Oh, you're welcome. It's been a lot of fun. I love, it's just that people walk into this and they have no idea what they're getting into trading.
True.
And they get in and they keep trying to work harder to do it. And it just requires a new way of observing, a new head rather than working harder.
Right. Well, that's a hard thing to do,
Well, if you're going to succeed in trading, you're going to have to do it. It's just not going to, it's a very different world. It is very different than success in other domains. And you're going to have to decide whether or not you love trading enough to change the way you interact with the world, because you are going to have to change the way, particularly you engage the challenges of your life. Absolutely.
Yeah. All right. Well, thank you again. And we will bid you farewell. We're going to get Scott in here. And thank you for that plug for him.
Yeah.
He'll probably be thrilled about that.
Scott and I go way back. And,
awesome.
He's a good guy.
Let me put my plug in here since I'm here. You can hear me, but yeah, Randy and I go way back, and Randy has helped tons of our traders. So just heads up that he's the real deal, and he knows what he's talking about. And if you ask any professional trader, what's the secret about trading, they'll tell you that it's between the left ear and the right ear.
That's a true thing. Well, thank you again, Randy. Guys, go and check out that link that's down there. And Randy, I hope you have a wonderful rest of your day.
I will. Thank you very much. And have a good one, Scott. Take care.
Thanks, Randy. Talk to you later, buddy.
All right. Hi, Scott. All right.
Hi.
That was Randy Howell, Trader's State of Mind. Let me just do a little housekeeping. And we are having a replay of this. It is being recorded. So if you have to leave early or if you came in late, don't worry. You can find it at tradersexclusive.com/archived_webinars. And usually we have that up by Friday after the webinar, but you also can watch it again through GoToWebinar, and they'll send you an email with it. And next up, we're going to be talking with Scott Barkley of ProAct Traders, LLC. He's going to be talking about finding the wide open spaces in the Forex for maximum profit. And let me just tell you a little bit about Scott. He is an award-winning Forex trainer who has mentored students all over the world since 2003. Scott's had one of his students win the FXCM King of the Mini contest 3 times. One of his students is now the chief trainer for an internationally known global Forex training organization. Quite a few of his students have gone on to be professional fund managers, and some still are clients, but they have their own hedge funds. Many of his students have been with him since 2005, and that was for a company that was founded in 2004. So that's quite a long track record there. Additionally, Scott has won numerous awards for his training, especially in Europe. He's also been a guest presenter for FXDD at venues around the world, and is a sought after speaker in Eastern Europe at the university level, even sitting in for professors at times. So he's a founder of ProAct Traders, an education and software company that has won numerous awards, including the Best of Round Rock, which is the home of Dell Computers. Scott trades and teaches live every day with his students Monday through Thursday in the New York session. He's currently a Forex analyst for invest.com and marketfy.com. Welcome, Scott. Thank you so much for joining us.
Good to be here. Good to be here. Been a while since I used GoToWebinar, so I'm not exactly sure how to get my screen to show. Could you tell me how to do that? Oh,
well, now you should have a button there that allows you to share your screen and your webcam if you want.
Okay, we don't need to see my ugly face.
Yeah, we're seeing your desktop.
Okay, so my desktop, so I need to, can I share a different one? Different desktop?
Yeah, you would probably want to stop the share, and then when you go to share it, it'll ask you what to share.
Okay, just a minute here. Okay.
There you go. Or
now I gotta,
that's me.
Okay, hold on. Show screen. And this one right here. Okay, how about now?
Yes, finding the wide open space in the Forex for maximum profit. Excellent. I'm going to mute myself and you take it away.
All right, thanks. I appreciate it. Hey, everybody, this is Scott. Glad to be here. As you heard, I've been a trader for 21 years, so I'm really one of the grandfathers in this business. Kathy Lean and people like that, myself, Rob Booker, you know, Greg Michalowski, all those people. In fact, I traveled with Greg Michalowski for 3 years when I was with FXDD as a training consultant. So basically what happens is I started out as a scalper. It was really good. I did 78 trades in a row without a loss. And then I looked down and saw how much money I made. And more importantly, I saw how much I risked. And that's when I had the paradigm shift and realized that scalping 5, 8, 10 pips was not going to be a long-term project for me, even though I had traded 70, 80 in a row. And so I began the process of finding out how the market really works. And that's what I'm going to try to show you in 45 minutes today, all right? There's a disclaimer, not going to read it, but there it is, okay? So what we're going to learn today is why you need to identify the wide open spaces in the Forex, how to identify the wide open spaces, and because it is your only area to trade, and how to become a target trader versus a scalper for way more pips than you're used to. What is the correct risk and reward to become a consistent trader, and how to press your winners in the Forex. So we at ProAct only trade the wide open spaces, okay? Because we know that that's where the bankers will be present. That's where the maximum opportunity is for the minimal amount of risk, okay? So if you learn this strategy, you can always trade with the big boys, okay? Now you might get on the wrong side of the order flow and now and then, that's called trading. But learning how the big boys move the market will change your trading dramatically, okay? The big boys are bankers. So just hold your questions until the end of this first part of the presentation. We're going to go in live and I'm going to show it to you, and then you can ask questions, all right? So there are many ways to trade the Forex: swing trading, position scalping, range trading, position trading, and target trading. And that is what we do. We target trade. So we're going to learn how to identify proven areas of low risk and high reward. Most traders are doing high reward for low risk. Learn where to get in and where to get out. Learn how to limit your risk while finding a high probability opportunity for way more pips than you're currently doing. And learn how the dumb money trades and how not to be one of them. By the way, it works in stocks and cryptos, okay? Once you know how to trade, you can trade pork bellies, you can trade the pound dollar, and you can trade Star Wars, whatever, okay? So it's important to understand how the big boys are, who they are, all right? So the big boys are, these are the top 10 banks. You can see Deutsche Bank is 14.6% of all the trades through in the Forex occur through Deutsche Bank, all right? If you add those up, it's almost 80%. So 80% of everything you're seeing in the chart is probably caused by these big boys, okay? If you find their move, then you find your opportunity, all right? So if you knew the targets, you would only make great risk for reward trades. Unless you knew the target and the stop loss, you cannot assess true risk and reward, so you're not trading, you are gambling, all right? If you knew the targets, you would always trade with at least a 1-to-1, 1-to-2, or 1-to-3 risk to reward ratio. If you knew the targets, you would never trade right into a target and get stopped out and then blame your broker. If you knew the targets, you would trade only in the wide open spaces, conserve your margin for the most opportune area to trade. So the question then becomes, can we know the targets? Okay, well, we're target traders, so we have the obvious answer. Yes, we can. So there is no rocket science in the Forex, okay? The Forex is complex, but it is not complicated. There are lots of moving parts, but it is not complicated, but it is complex, okay? And the big boys have to telegraph their intentions to the world. Why do they have to do that? Because they would love to take the euro dollar down to whatever number, 1.2500, and they're trying to get it going. So what they would love to do is call HSBC, would love to call up Bank of America and say, hey, Bank of America, we're trying to take the euro down here to 2,500. Could you help us? Well, they'd love to do that, but they can't because that's called price fixing, and you go to jail for that. So what do? They telegraph it in the charts so that all professional traders know how to read the charts and what the actual agenda is for today, all right? So we're going to walk through how to find those wide open spaces. And remember, they're areas of high reward, but low risk, and it's not as hard as you might think. Okay, so the first thing you got to do is you got to get direction correct, all right? If you miss the direction, you're going the wrong way, obviously, all right? So use channels and trends for that, mostly channels in the Forex because the Forex does not trend. I know you can read 1,000 books that says the market trends. It's BS. The market does not trend, it ranges, all right? In fact, you can clearly see that right in here at this point. Let me see. I wanted to check, can you see my drawing on there? I didn't know, I'm using another program. Can you see the drawing on that thing? Anybody there? Okay.
Where's the drawing at?
I just drew a line, a big square on the chart, so I wanted to see if
I
you
could
see
see a white square, yes.
Okay,
White
good.
rectangle.
That's what I wanted to know. Okay, great.
Okay,
So
cool.
you can see in reality, they are just doing a big range. That's it. All right. So, that's it. All right. So you got to get that right. All right. That puts you on the right side of the order flow. So what you got to know is what about trends and channels? Well, trends have to be less than 45 degrees. Okay. So if you're going up, it's 8 to 2 on your watch. You want to know how do I do this? Okay. 8 to 2 on your watch is less than 45 degrees up. 10 to 4 on your watch is 45 degrees down. So a trend has to be in this 10 to 4 or 8 to 2. All right. If it's shallower, it's a channel. If it's steeper, it's a channel. Channels can be steeper or channel or shallow, but a trend has to be just slightly less than 45 degrees. All right. Now, why is that important? Because your trades are unsustainable moves inside a sustainable trend or channel. You got to get that. My trades are unsustainable moves. All right. That's why it's important to know the target. All right. If you don't know the target, you don't know the exit. You don't exit out, and you give it all back, or you buy at the top, and then you get stuck in the pullback, and you get stopped out, and you go, doggone broker, stop me out again. No, you didn't. You bought at the top. All right. So you can see right here that that are unsustainable moves, unsustainable, right? Greater than 45 degrees, greater than 45 degrees, all right? But that is a sustainable move, all right? Now, right in this area here, if you didn't know the target, right here, and you traded right into it, you gave every bit of it back. You see right there, right here, all right? So, it's going, I'm in. Broker stopped me out again. No, you traded right into the target because you didn't know where it was. All right, so it's critical to understand where the targets are, and they use multiple targets. I'm going to show you how to find them. All right, so a sustainable trend produces unsustainable moves, which is my opportunity. All right, so let's go back where this trend started and see how to find the targets. Okay, so now I've got a tool on here that actually finds the Fibonacci's. Okay, I'm going to do it with Fibonacci's when you go live, but this just makes it easy to show it to you. All right, so you can see right here, if this is just starting, I can quickly see that my next opportunity is there, and my opportunity is there after that. And by the way, as you get going, due to the Fibonacci sequence, the moves get bigger and bigger and bigger. Now, the other thing is, the bigger the move, the longer it's going to take. So you've got to always remember that, all right? So let's go back and see where this started, all right? All right, so there's the wide open space, and there's the wide open space, all right? Now, what do I want to do, all right? So here's that same move. There's the first one right there, the second one right there, the third one right there, and right there, all right? Now, notice where they went. To the target, to the target. Now, they did an ABC. By the way, ABC is a corrective move, so that means they're going to do it again, all right? So then we go where? Right down to the target, and we missed the target by 2 pips down there, 4,900. 2 pips, right? All right, so in a trading world, we would also have fibs, which is what you'll most likely have if you don't have our charts, all right? So here I've got a move to the downside. Here I've got those targets on that you just saw, and I also have the fibs on here, all right? So I have trend, fibs, previous support and resistance, everything on the chart, all right? Can you see the wide open space? Can you see the wide open space? All right, can you see the wide open space? All right, you can see where the next one is coming. The next one is going to be right down here, all right? Right, and this pullback allows me to get this one again, and then this one, all right? All right, so the market will absolutely show you where to trade. It will absolutely show you where the opportunities are, all right? Your job is to find them before it happens. Because if you can do it before it happens, what ends up happening is you know the reward. Therefore, you can major in risk. And then the criteria for taking a trade has nothing to do with whether you've got a trade setup. It has to do with whether you have risk or reward with this trade setup. All right. So here we go. All right. So your trades are the wide open spaces right there, right there, right there. And the chart tells you exactly where the bottom was, and you can see the reaction. They hit the bottom right here, and immediately they exit the trades, and up they go. Right now, a banker will make all of those all on the same trade. So that would be four positions for a banker. That also will be your goal to get where you're making 4 positions with the banker or more. Right. So here's an up move. All right, so it starts here. We have to use a trend, and you put on support and resistance, and you must find the heart line. Now, if you use an MT4, you don't have a heart line. Gee, I wonder why. You could use an Andrews pitchfork, a little more difficult, but no matter what, all you got to do is find the 50% of the trend, and you have a heart line. All right, so that's the start of a new trend, and these are now the targets. You see them way before it happens. You know exactly where they are happen. All right, so here we go. All right, now remember, my trades are unsustainable moves inside a sustainable trend. And as it gets bigger and bigger and bigger, the longer it takes to get to them. See in here, they go pretty quick, okay? Because the next target is quick, the next target is quick. Then they start to spread out. Then they really start to spread out. And then this one up here, that's the top. And look how long it took to do that. For a long, long time. It took 2 pullbacks to get it to target. But ultimately, they go to target because the target is known by the big boys back at the bottom, or if you're going down at the top. All right. So I'm going to show you how to do these in just a minute. All right. So always remember, the pullback is my friend. Now, for most traders, the pullback is not your friend. The pullback is your enemy. And the reason it's your enemy is because you're buying at the top or you're selling at the bottom. It's not your entry. It is it's not your stop loss that's getting hit. It's your entry is wrong. So your stop loss is definitely in play. All right. So the bigger the wide open space, the more time it usually takes. All right. So here's a FedEx logo. Can you find the arrow? All right. If you've never seen the arrow, it's between the E and the X. Okay. Now the rest of the world sees the arrow. We see the market. We see the trade setup inside the chaos of the candles. That's what a trade setup is. All right. When us, it looks like this. Okay, so back to that. So we have, things on our charts that show momentum. All right. So it starts up here. You can see the arrow comes in and it pushes it down. So we know they're pushing down. Then this big dot comes in. This white dot means they're going 55 pips or more. All right. You don't have that on your charts, but I'm just showing you what they look like. All right. So we want to see momentum at the start of a move. Now, all moves are based on the Fibonacci sequence. You have to memorize this sequence, 21, 34, 55, 89, 144, 233. That's where the market is trying to go. Once they got the agenda or the direction set, They're trying to move this Fibonacci sequence, all right? So if you take a look here, all right, and we've got that same picture up here. Would you have the confidence to trade from the top to that target if you knew the target? Would you have the confidence to trade to that target if you knew the target? All right, if you knew the target, would you have the confidence to trade to that target? Okay, then would you not know not to trade this one because you're too close to the target? See, so you're too close to the target, bounces up, gun broker stopped me out again. No, you didn't know where the target was because they're using a Fibonacci sequence. That target right there is 55 pips from the top. This target down here is 89 pips from the top. This down here is 144 pips from the top. All right, it's just Fibonacci sequence. It's not rocket science. All right. So will it work with scary accuracy? Yes, it will. Jesse Livermore, he's a very famous trader, stated this: the game does not change, and neither does human nature. Bankers are mathematicians, and they trade the math. They also telegraph their intentions, which is why the market will constantly do similar things. It's not rocket science, all right? So what you want to do is you want to set the deck in your favor, okay? If you're trading for a 1-to-1 risk to reward ratio, which we would never trade for, but if you were, you have to be 50% right to break even, 60% to do profitable, all right? Well, we're never doing that. We're always looking for a 1-to-3, 1-to-4, all right? So 1-to-4, 4 times reward for one risk, I can break even if I lose 80% of my trades. Well, you want to stack the deck so you don't have to be the greatest trader on the planet, all right? And the magical numbers for success are this: 65% win ratio, 35 plus pips, average pip captures. You must press your winners without exception. The secret to being successful in the Forex, folks, everybody wants to know what it is. What's the Holy Grail? That's it. Press your winners without exception. With a 65% win ratio and 35 pips average pip capture, you can trade for the rest of your life, whether it's micros, minis, or standards, all right? Now, how do I get to 35 pips average? Well, you can't get there to an average pip capture of 35 pips trading for 5, 8, 10 pips. It doesn't work, all right? So this was a broker's contest that was done by a famous broker, Forex broker. And what they did was they had a contest and some guy won it. And what they did is after the contest, they went in and they analyzed all the accounts, all right? So all the losing accounts up here, right here, all these losing accounts right here, they were 64% right in finding a trade, all right? And every one of these accounts lost because their average pip capture was 5.74 pips, scalping 5 to 8 pips. Now, all the winning trades, accounts.
I'm already on the second speaker.
Hey, Sherry, your mic is on. Just give you a heads up there. Okay. All right.
Hot water into that and then dump
So
it into your...
they were trading at 70%, so 6% better at finding a trade. But they all won money because their average pip capture was 36.49 pips. All right.
So carbs.
So you can, hey, Sherry, your mic is on. You got a hot mic.
Sorry about that.
Yep, no problem. Okay. All right, so you can see here, this is just facts. These are facts, folks. All right, so you got to press your winners without exception. That's the secret to success in the Forex. And guess what? The only places you can do it is where you have a wide open space. All right, so you never trade more than 2% of your account on any trades not in profit. Divide that amount into 3 units, 3 micros, 3 minis, 3 standards, depends on the size of your account. Never enter trade one with more than 1/3 of your lots, but because you're only risking 1/3 of your lots, you can have a 3 times technical stop. So the wick I just showed you won't get you, all right? And you trade 2, that's the presser, is always 2/3, and stops are changed to maximize to the max if you the max you've agreed to risk. Okay, so and you have to have a minimum wide open space of 55 pips. So let's say you agreed to risk 100 pips total. All right, so the first trade would go on with 1/3 of my lots with a 100 pip stop. But when the other 2/3 come in, I can't risk more than 100 pips total. All right, so trade 1 would have to go to break even, and now I could actually have a 100 pip stop on the 50 pip stop on trade 2 because it's 2 units. All right. You actually use the real estate of the day. I'll show you when we get to charts. And then use the ATR to find today's target. The ATR is probably the #1 thing that traders are missing. All right, they don't have an ATR in their charts. They don't know the average true range, and the market is going to use them every day. Why is it going to do that? Because the big boys make the ATR. They know exactly where it is. All right, so I'll show it to you. You always use entry orders on trade 2, market orders on trade 1. One-to-one risk reward as you approach the target. So you're approaching your target, you're 17 pips away. All right, you move all your stops to 17 pips away. All right, I got to move to 8 pips away. I moved to 8 pips away. All right. So our trade, if we find one, will be filtered by the ATR, or the average true range. What is it? Okay, so you can put it on any chart, right? We have a little widget that gathers all the information, and you use the 14-day, okay? So you can see here, Aussie New Zealand last week was doing 82 pips every day. Today it's doing 75 pips. Its 90-day average is 62, 180 days is 60, and its average is 70 pips a day. So it's right in range of what it normally does, okay? And that's a daily. Every day it's going to do 70 to 75 pips. Occasionally 82, occasionally less at 60, 62, see? So why is it important, okay? If I have 55 pips or more of ATR, I may have an opportunity, all right? All right, if you have, but if I open it up and I've already moved 26 pips of this 75, for instance, here, I got 75, I've already moved 26 pips. What does that mean? I don't have 55 pips left, so I do not have an opportunity. Why? I don't have 55 pips, and we cannot press our winners if we don't have 55 pips. That's the secret to being successful in the Forex, all right? So I'm going to do this live now, so you can ask questions as we go along. I'm going to try to get as many live charts as I possibly can in so you can see it. We had 2 live trades this morning. So I'm right here on the Aussie yen. We traded this one this morning. All right, so we took a live trade here. All right, you can see quickly. Let me just take this off for a minute just so it makes it easier for you to see. The target was here. That's the ATR target. All right, so I'll pull the ATR up here. Hold on just a minute. There we go. Hold on. All right, so ATR on the Aussie yen and 169 pips. So yesterday at 5 o'clock, that's when the New York fix happens. That's also when the ATR changes. So yesterday at 5 o'clock, let me go up to a 60, easier to see. All right, here's 5 o'clock yesterday, 1600. The open was right there at the bottom. So I marked it from there. I went down for 169 pips. You'll see it right here. I'm going to open this up and you'll see what it's set for. 169 pips as a seller. There it is. And right there, where do we go? To the pip to the ATR. All right, so that was a great trade. Here's trade 1, here's trade 2, and here's trade 3. 3 positions to the downside. Wow, how sweet is that? All right, so how do we trade it? Okay, this is trade 1, this is trade 2, this is trade 3. All right, 1/3 of my lot's here with 3 times the stop. Okay, so here's the stop right here times 3. All right, so the initial stop goes in up here, right? Now, when trade 2 goes in and starts to move to the downside, this has got to be moved because I have two lots in here that I've got to move this by 66%. But the chart tells you that, let me just clear this off. The chart tells you take your stop right above here, right? Now, I'm a winner on trade 1. All right, I haven't made money on trade 2, but it is making profit. All right, trade 3 goes in right here. All right, so 1, 2, 3. Trade 3 goes in here as it makes the thrust to the downside. You move your stop here, and as you get close to the target, it's a 1-to-1 risk to reward ratio. How much did you make on that trade? 90.51, 89.20. So you made let's see, 120 pips on trade 1, 120 on trade 1. You made 90 pips on trade 2, and trade 3 made 30 pips. All right, so 90 and 30 is 120 and 120, 240 pips. Beats the heck out of 5 to 8. Okay, that's just one live trade this morning. We also traded Aussie Swissy this morning too. Let's go see what it does here. Okay, so again, right to target, right? Live trade here on the breakout of the wedge. You had a wedge up here, as you can see, a slope support. All right, we had a live trade yesterday that didn't work, all right? But it did an A, B, C. We know it's going down. There's trade 1. Can you see the wide open spaces? Trade 1 is here, to the fib. Where's trade 2? To the fib. Where's the next one? To the target, and we hold for the next fib, right there. Lots of pips. These are not big ATR currencies. Aussie Swissy, 88 pip ATR. Compare that with the pound New Zealand, 196 pips, pound yen, 206 pips, euro New Zealand, 190, euro yen, 152 pips. That's day in, day out, day in and day out. What's the average trader getting? 5 to 8 pips. When I was at FXDD, I was in the pits one day. I was there for 3 years. I was in the pits one day, and I asked the guys, I said, what does the average retail trader get out of a trade? And he said, the average retail trader trades for 5 to 8 pips. That's it, folks. 5 to 8 pips. Why do they do that? I don't know where it's going, man. It's going against me. Oh, no, it's going against me. Go and click it out. Oh, man. I'm a winner. I made 5 pips. Yep, you're a winner. You won the battle. You just lost the war. You now got to be 90% correct for the rest of your trading career. 90% correct. Now, there's only one person who can do it. That is the greatest trader in the planet. All right? Losses are part of the deal. The market's going to take 25% of your trades away just because it can. I got to get to a 65% win ratio. All right, then and 35 pips average pip capture. Then I'm sustainable. I can do this forever. All right. Notice that these right here are unsustainable moves. They're unsustainable moves. Therefore, you got to know where the bottom is so you keep moving your stop. All right. Just look at the move to the upside here. Unsustainable. They pull it back. Unsustainable. They pull it back. Unsustainable. They pull it back. Make the turn. Now we got an unsustainable move. What's next? A pullback. All right. Because no professional seller is going to sell down there. They'll only sell if it goes back up. Then they'll sell. And that's why the market does that stuff day in and day out, and you know it does that, right? So these pullbacks are my friend, right? Let's see, we did the AJ. Did I do the AJ? Yeah, we did AJ already. Also, New Zealand yen. We traded New Zealand yen this morning also. And there we go. These are all live trades just a couple hours ago. All right. So you can see here, the structure was a down move. Can everybody see that the angle is correct? And we auto scale it right here. All right. I'm going to pull up a little graphic for you and prove that to you. Hold on just a second. Hold on. Nah, come on, baby. Oh, well. All right, never mind. All right, so as you can see, we've got a sustainable move to the downside. These are unsustainable moves inside it, right there. All right, finally came up. Hold on. Took it forever. I just restarted my computer before it started, too. Anyway, all right, 10 to 4. All right, 10 to 4. You can see this is still a little shallow for a trend right there. All right, but as you can see, it is sustainable up to 240. All right, there it is. That's sustainable right there, right there. So look at it from this standpoint now. We auto scale it, all right, and put this back up. There we go. Pretty close right there. All right. So all these moves are unsustainable moves, unsustainable moves, unsustainable moves inside a sustainable trend or channel right there. All right. So let me go do a couple more here, and then we'll see. You'll see them. All right. All right. So here's an example. This is one that hasn't gone yet. We've got a target up here. It's always the ATR target is the first target. All right. So if you don't know the ATR, you don't know what they're doing. All right. So we got a 1, 2. We're in hopefully a start of a third wave to the upside here. Okay, so here we go. I move that. All right, put the channel on. All right. Prove the heart line, prove the heart line, prove the heart. So you got to prove the heart line, or you don't know that outside line is right. Unless they tell you the heart line. Why do they do that? They're bankers. They like the books balanced. There's always 2 parts to a trend or a channel. There's the lower part to the heart line and the upper part above the heart line. What do most traders do? They put their trend or their channel right along the top of the candles. That's wrong. All right. All right. So here we go. All we got on here is a set of fibs. That's it. And the ATR target. That's it. You should be able to easily see the whole trade is right there. And trade 1 is there, trade 2 is there, and trade 3 is here, holding that to the target. But these are called T30s. They're on our charts, and they're 30 pip targets, also based on the Fibonacci sequence. So there's at least 2 positions in here, in that place right there. So 1, 2, 3, 4 to target, 4 to target, and it's going up to 67.86 from 65.96, exactly 100 pips. Oh, no, more than that, 200 pips. All right. So there you go, 200 pip move right there in front of you. Right? Probably happen tonight if the structure holds. That's the whole key. Does the structure going to hold? Let's go over and see what we do on like a major. I know you all want to trade the euro. It's a dog. It's a piece of junk. So all those other currencies went to target. It's still trying to go to target, but it's here on target all night London and all this. So what the euro dollar does is teach you to click out because it doesn't have the participants. Has lots of down money in it, clicking out for 5, 8, 10 pips, but it doesn't have the participants trading it to the downside or the upside. And so it's actually a dog, and it teaches you. There's the London session, which was about 40 pips, and here's the New York session, which is about 40 pips. That's it. That's all. All right. So what does it teach you? Not to trade for 55 pips. It teaches you how to trade for 20, 30 pips or less. All right. So the euro dollar currently has an ATR of 102 pips, fairly substantial, but you see they can't even get it going at all. Okay, but you could also see trade 1 and trade 2 there, pretty easy to see. All right, so all that's on here is, let me take our tool off, all right, just so you make it easier to see. All right, so let me pop up a set of fibs from the swing low down here to the swing high, right there. There you go. All right, so do you know the 214? 214, by the way, is a 786 the other way, a 382, a 50, and a 618. Do they know the 382? To the pip. Do they know the 214? To the pip. They break here, you think they'll know the 50? To the pip. That's the end of the trade because the ATR is there, all right? So you don't know the ATR is there, you see it come down to the 50. Oh, it's going to break the 50, it's going, man. You got pop in and it pops back up here and stops you out. And you go, the broker stubbed me out. No, you didn't know the target. You weren't on top of the target. Let's go over to, let's see, dollar Swissy today. Good opportunity this morning, as you can see here. So let me go up to it 60. By the way, you live in a 60-minute world. You can obviously see that is an unsustainable move. That's unsustainable. So what do? They have to pull it back. So the pullback is your friend, all right? You know that. A, B, C, and now we can go. And now that's unsustainable. You know that. This is sustainable right there. That's sustainable. These are not. So you better know where the target is or you give it all back. Now they're not quite to target yet, but it's pretty easy to see. Here's trade 1 and here's trade 2 down to the 618, and you would actually hold that to target. All right. How do I trade that? I enter with one. The first trade is 1/3 of my lots. Okay. 1/3. And this trade is 2/3 of my lots. So 1 position and 2 positions. All right. Starting with a stop based off the 10-minute chart. You get out of the 10-minute chart right here, and if you're going to trade this one right here, this trade 1 on this breakout right here, then your stop is going to be this. You first configure the risk and reward. Here's my my risk right there times 3. So stop would be somewhere up in here. Now I want you to see something. In order for the currency, once this gets going to the downside, starts going to the downside, in order to go back up and hit that, it's going to have to do its ATR. What it does typically in 24 hours every day, it's going to have to do that in the next couple of minutes to an hour or two. All right. What are the chances of that happening? It's not probable. It is possible, however, but it is not probable. All right. Second trade goes in right here, right there on that break to the downside, and all this stop's got to be moved. All right. Chart tells you can move them right to that support right there. All right. Now I can't lose on trade 1. I'm actually in profit. Trade 2 is at break even. When I get the move down here, let's say I put an entry order in here and it pops back up here and makes a turn. I'm fine. I don't move my stops until I get the thrust to the next target. And then I move my stops down right above this fib and I hold for the target. Right, and that's about where we are right now, just shy of the target. Right, so you can see right here now I got about 22 pips left. Is it right there? Right, so not much left. And so my stops would now be all the way up here, right here, holding on 3 positions right now, 3 positions. It goes to target. What am I going to get? 1, 2, 3, 4. 120 pips on the first trade, 78 pips on 80 pips on the second trade, and about 58 pips on the third trade. Right? So there you go. Market is constantly doing this. This is what they do. All you got to do. The schools in the past, go in the past. See if they didn't do that. Well, gee, I think they did that. What did they do? Right there. Here's trade 1, trade 1, trade 2, trade 3, right? And that's the overall target. If they get to it, fine. If they don't, they're going to have to correct it to go again, right? These wide open spaces are your opportunities. If you trade them and press your winners on them, you'll make more pips than you know what to do with. All right, last month we had a big trade. We do a swing trade once a month. One of our traders, Kay, pulled 6,000 pips out of that trade. 6,000. 1,000 pips. We have lots of traders that did 1,500, 1,800. All right, so it's real. The stuff works. It works. But what has to happen is you have to have a paradigm shift in your brain. What is that paradigm shift? I got to recognize that what I've been doing, scalping 5, 8, 10 pips, will never work. It will never work. The paradigm shift comes when I understand that I have to do something different, because the definition of insanity is to continue doing what you're doing but expect a different result. All right, so you don't want to do that. You want to have the paradigm shift. All right, so let's make sure we understand what a paradigm shift is. Okay, pull it up here. I'm really going slow with go to webinar here. Come on, baby. There we go. Got it. All right. A paradigm shift is an important change that happens when the usual way of thinking about or doing something is replaced by a new and different way. We've been traders. I've been trading since 2003. Our company was founded in 2004. Since that time, we have traded lots and lots of traders, tons of them. 97% of all the traders who come to us have been trading for 3 years unsuccessfully. Their average pip capture is 5 to 8 pips if they make a win-in trade. Their losers overcome their winners. The average trader who's come to us has already blown up three accounts. All right? So I'm sure you might say, no, that's not going to be me. Well, statistics say that it might possibly be. All right. So at any rate, the key to being successful in the Forex is to press your winners. So you've got to know how to press your winners without exception. All right. So anybody got any questions on any of that at all? I'm pretty much out of time here.
I'm going to check and see right now. Now, do you like to see them yourself?
Yeah, I'd love to see them myself.
Okay, just a second. Well, I think I killed something to let you have organizer. Great. How do I get it back?
Don't know. I don't know anything about GoToWebinar. So
It's just one of the little boxes that shows me how many people and everything, but it's not giving it to me. Okay, so let me just look here for you.
okay.
Da-da-da-da. Are your targets ATR/3?
They're just the ATR based on 14-day cycle. That's what they are.
That's Sammy. Sammy, that's the ATR. He wants to know, are your targets ATR/3?
The day chart, the target for the intraday target is that, all right? But the market is always trying to do the bigger picture. That's a great question, by the way. So let me pull it up here. All right. So, all right. So the market is always trying to do the bigger picture. All right. So if we make the turn up here with a rising wedge, okay, where are they trying to go? They're trying to go all the way back down here to this bottom right here. That's where they're trying to go. But that's more than a one-day run. And so they do it in unsustainable move, correction, unsustainable move, correction, unsustainable move, correction, unsustainable move. The intraday target is always the ATR target, which is at 5 o'clock New York time, wherever you are in the world. Once you know direction, it's going up, it's going down. Once you've got that, you're making lower highs here. You can see quickly that you could easily put a channel on here and begin the process right there. You know, the heart line into the heart line. So you know that line out there is good. How did I know to go to that one right there? Because I've done this 50, 60, 70,000 times and my brain automatically does it. I don't even think about it anymore, but it can calculate that heart line if you use it enough, and it'll do that. All right, so the ATR target is the one today. So if I open up the chart today and go, oh man, it's bright red going, I'm in. Do I have 55 pips left? No, I got 20 pips to the target, and I only got about 6 pips to the 618 Fibonacci target, which is a bounce point. So if I make a trade here, that is a bad trade, and I can't make it anyway. As you can see, let me make the candles bigger here. All right, I can't make it anyway because this is my risk. It's going to be 5 to 7 pips above that right there, and there's my risk, and there's my reward. Is that a good trade? It's a lousy trade. It's a lousy trade. All right, where's the real trade? The real trade was here and here. All right, once you got the break of the triangle right there, that was it. right there. It's called a break, hook, and go. You get a break, hook, and go. Off you're off. 2 positions there, 1/3 and 2/3. 3 positions to the downside, 120 pips on the first one, and 90 pips on the second, times 2 lots. 180 plus 120 is 300. 300 pips. That's what you can do every day if you learn to trade at the targets and you quit doing scalping stuff. All right. And I understand. I used to be a scalper, so I know all about scalping. All right. My opinion is that one guy in 10,000 can be a successful trader. And that's just an opinion. I don't have any statistics on it, but my general feeling after 21 years in the market is 1% out of 10,000 can do it. And that's probably not me, and it was me for one time. It was me. I did 78 in a row. Well, I also did 60 something in a row after that. I never ever did it again. All right. So, all right. Anybody else?
All right, I got another one here for you. Does this method work in futures marketing, in the futures market? And another person says, do you only do Forex?
No, we do Forex, we do indices, and we do crypto. So let's take a look at Bitcoin today. All right, so this is Bitcoin. All right, there we go. So you can see.
So Kim's asking, does this method work in futures?
Yeah, yeah, it works on anything that can be traded is traded this way. Why? Because these charts are a visual representation of the herd mentality. That's what they are. They might even know where that line is right there, but they will be done with it at that point because Fibonacci is built into your system. You can't walk unless you got Fibonacci working in your body. Your 382 is your chest, your waist is your 550, and your knees are your 618. It's a divine number. So they would do this anyway. In fact, the way they found out that Fibonacci was working in the financial markets was a rice farmer in Japan or China, I can't remember where it was, and he kept going in and he got his rice down there and he kept marking little marks on it. One day he went and sell it, and he sold it all, and he became fairly wealthy, and they wanted to know how he did it. All he did was a Fibonacci sequence. Nobody knew it was happening. But now they knew it's happening. Right? Just like most traders don't know that the market moves on 55 pips. We didn't know it either until we started getting white dots, these things that we programmed into our charts. So, you find the white dot, it comes in session, they're going to go 55 pips. Oh, get it the right way. So, what's going on here? Well, again, I don't know what happened here. Must be that chart. That's weird. Let me just go find another one.
While you're doing that, is the entry purely based on fib, or is there any discretion on the pullback?
A pullback is to a fib, and you got to have a minimum of the 382. You have no risk and reward unless you have a pullback to the 382. All right. So let me pull that up, show it to you. I like to show visuals because I do this every day. So see at the 214, you're going to risk 1 to make 0.62, which is the next target is the 270. So you're risking 1 to make 0.62. It's the only fib you can ever trade. Every time you see a 214, which is nothing more than a 786, by the way, backwards, all right, which is a very important number. All right, once you do that, all right, anything other than that has risk and reward. You're going to risk 1 to make 1.06. All right, 50%, 1 for 1.5, 618, 1 for 2.32. See, so you can't do it at that. So every time you see a 214, you go ding, can't touch this. That's how you will remember to do it. All right, it works in everything because the market works in fibs. The market works in fibs. If you go in his XRP, all right, so XRP, what are they doing? Are they doing the fibs to the downside? To the fib, to the fib, to the fib, to the target, to the fib, all right? And that next target is down here. Are they going to get to it? To the fib, to it. See that? Next target is there. Where they go? To the target, to the target. Doesn't matter. That's XRP, all right? You go down and go over to Dow Jones, do the same thing, all right? So you trade E-mini wallets or something like that. Here's a trade going down. Do they know the fibs? 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 Right? To the pip, see? All right, doesn't matter what you're trading. There's the wide open space, all right? They knew that one right there, and they knew the over one right there, see? It doesn't matter what you're trading. Pork bellies, pull it up. Soybeans, pull it up. Golf balls, pull it up. It'll do it, all right? Because this is human nature. Everybody thinks trading something. This is a visual representation of human nature. You are watching the herd, And when the herd knows what to do, you ever look at cows out in the field? Cows are all pointed the same way. Why are they doing that? Because they're going to the other end of the field. Once they get there, they turn around and they all go back because they're a part of the herd. That's what the herd does. You're watching the herd. And the herd does all kinds of signals in here and tells people what they're going to do. This is the agenda. We are going to do this. 90% of retail traders have no clue what this agenda is. The agenda is based on the structure that the bankers printed, right? So when they build one of these channels like that, do you know how many billions of dollars it takes to build one of those in the Forex? Billions of dollars to build that. So if you're going to trade it, if the bankers are investing money to build the structure, they want a return on investment, which is why the agenda works, right? It's really not rocket science at all. It's just human nature, human nature.
Nice. Hey, so the white dot is an indicator that shows up there, or is it only on the charts for reference?
They're only in my charts. Okay, we have special tools
You
that
set the
show us.
parameters for that, so it'll show up, right?
Yes, that's correct. If it hits the parameters, then it shows up and says you're going 55 pips on a 10-minute chart. All right, so get over to a regular chart. Let's go to the pound, something like that.
All right, now I got a recommendation here for you. I've been a member in Scott's room. Been busy this year helping with my son's business, so I haven't been trading, but I can tell you everything Scott is saying is absolutely true. You won't find a better mentor anywhere, and in my opinion, need to be his accountant, LOL. Anyway, see you soon, Scott. Stop thinking about signing up. Stop thinking, just do it. That's Terry Taylor. And Maury, oh, she says, oh, and say hi to Karen and Jerry.
Okay,
And
great.
Maurice wants to know, do you have an in-person course with this Forex teaching?
We do, but we do it in a group setting. All right, and we just finished one, a live setting 2 weeks. We only do it a couple times a year, but the information is available. Actually, most traders go through it self-directed. It's all videoed and all that kind of stuff, but we're in live every day. So you can watch the videos that we did when we did a live session, get it down, and then every day we're live in the market. We do 2 sessions. We do 1 session, a New York session for everybody, and then at the New York session is over, we do a private lesson with all of, they call them fast trackers. These are mentored students, and we do it with them privately. We'll take one little piece that the market showed us that day, and we'll go, let's understand this. Let's understand it. You have to understand price action. Price action, bankers do not trade with indicators. They only trade price action. So you have to learn to trade price action if you want to trade with them. And by the way, if you're not trading with them, you are by default trading against them, all right? And so you really got to get a handle on that, right? So hopefully I answered that question.
Now, do you have a link that we can send them to so that they can explore your offer?
Yeah, go to proacttraders.com. You can come, oh, sorry. All right, so here's what we want you to do. Pull this back up. All right. So we don't want any of your money. We don't want any of that kind of stuff. We want you to come in and sit in our room for 10 days. It won't cost you nothing. You're going to sit in there and see us do this methodology day in and day out. You're going to see traders making hundreds of pips, not 5, 8, 10. We're talking hundreds and hundreds of pips, and you're going to see it and you go, wow, you might even catch a few of those yourself, because if we identify an opportunity in session, like 3 today, there were three opportunities that you could have made. If you traded all 3, you made almost 1,000 pips today, right? So most people say, because the number's so big, they go, that can't possibly be true because I have never seen it. The reality is it is true. It's just that you've never seen it. So what we want you to do is come over and spend 10 days, see if we're a fit. If we're a good fit for you, hey, then we'd love to have you join it. If not, most people say they learn more in the 10 days they were in our live room than they have in the last 2 years. No matter what, you're going to come away with a positive experience. You're going to know more than you did 10 days ago, and it will cost you nothing. And see if we're a fit. So it's
Yeah. So when they get to the main website, proacttraders.com, where do they need to click to get that 10 days in the live room?
On the membership options, let me pull it up here real quick.
Membership options. Okay, I got it.
The first thing I say, you want to go kick the tires? All right, click here. So let me pop up another
All right,
browser
I'm
here.
putting it in here so that they can figure it out. All right, I put that in there.
Membership options right there and right here. Want to try this out for free and see if we're a fit? Click here. You can click the girl out, but she'll walk you through that page. But just click
Okay.
there and it'll get you
All
all
right,
set up.
good deal. All
All
right,
right,
so
everybody.
I'm gonna
Thanks
have
for
to kick
inviting
you off
me.
now. Thank you so much for coming. I hope you'll come back again.
Yeah, loved it. It was great, and hope to see some of you there. Hopefully, you picked up some things today, and we'll talk soon. Have a great day,
All right.
everybody.
Thank you. Now, everybody, you take advantage of this offer here. 10 days in the room probably get you a lot more information than you can even possibly begin to know. So I'm going to bring it back. That was Scott Barkley of ProAct Traders. Next up is Daniel Bustamante of Landshark Capital. And again, wanted to let you know that we are recording this session. So you can, if you have to leave early or if you've arrived late, you can definitely see the whole thing for yourself. Daniel, I have you in the room 3 times. So which one do I pick? Speak to me.
Oh, weird. I think it's this one here. I'm not sure why there's, yeah, there we go. Weird.
Okay. Well, I did a thing where I closed one of the little boxes here and now I can't see who's in here with me until I go to a different spot, which I'm not used to. So I'll have to figure out what I did there. All right. Well, thank you for joining us. Let me just do your intro and then I'll put myself on mute and you can take it away. Dan is the founder of Landshark Capital and began teaching in 2014 after leaving Wall Street, where he spent years as a futures prop trader and portfolio manager. He teaches futures, options, and price action through on-demand and live training classes at Landshark. And how long have you been, when did you found Landshark?
So we started
was that in 2014?
Yeah, 2014, but then I sold the original company in 2018 and took a few years off. So.
Ah, well, there's fun in that.
Yeah, for sure.
Okay. All right. Well, that I'm going to make you the presenter. I can't figure out which one is you though. Well,
Weird.
we'll just have to do it trial and error. That's all. Let's see.
Okay, looks like, no.
Did it give it to you?
No, it didn't bring it up here.
All right. Hold on.
Okay.
Well, one of you is gone, so I'm going to give you to the next one.
Okay, there it goes.
Did it give it to you that time?
Yeah, I got it. Let me see. I wonder why it's showing 2 people.
Well,
okay,
if you logged in on, I'm not sure how good GoToWebinar is with clearing its cache.
Yeah, well, that's why I logged in from my Mac, so maybe I left it logged in there. So
here we go. I can see it. The power of price action. Boy, this fits perfectly with.
Yeah, what he was just saying.
Yeah, with Scott's talk. Yeah. Cool. All right. I will let you take it away now. Well, I can't make you the organizer because I can't figure out how to find that right now, but I will come in at the end and any questions that come up, we'll field them then. How about that?
Perfect.
All right, take it away. Thank you for being here.
All right, yeah, thanks for having me. Obviously, I caught the end of his presentation, and I will say before I start mine, he said a few things there that you're going to hear me reiterate on this one here when he said that the bankers are using price action to trade the markets. I can tell you that firsthand experience because I'll go through my background in a second, but I spent years on Wall Street trading for firms, first as a proprietary trader for a firm and then working for a long short hedge fund. So that's for sure the truth. When we looked at markets then, we're not necessarily using indicators, but we are using price action. So that's, yeah, that's for sure true. So I'm going to get into it here, talk about the power of price action. As always, I got to throw this out there. This is educational purposes only. Past performance is not indicative of future results. So look, I always like to start these in this. If I'm a little rusty, you guys have to give me a little bit of leash. This is my first time doing a webinar, probably in like 2 or 3 years, really. And I'll give you the background of who I am and my company and the whole story, because I think it's important for context to understand kind of, you know, my journey in trading and journey of teaching people. So I'll talk about my introduction a little bit, how to stop over trading and scalping with 3 simple fixes, learn how to keep more and give back less. Then I'm going to walk through how to trade in a more controlled manner using the concepts that I teach. and that I've literally used on my career as a Wall Street trader. Then I'm going to go through our futures training offer, give you guys something cool at the end to come and hang out with us for a month, and just see how we do things. So yeah, let's get started into it. Like I said, this is my first webinar in a bit, so you gotta bear with me. So look, I want to talk about story real quickly, and I'm not saying my story is better or worse than anyone's. It's just my story as I get into this. And I always want to tell this because as people, if you're exploring trading or you're getting into this space, I think it's important to understand, the background of people that are teaching you and understanding, because it gives a perspective of how people do this. So I started back in 2007. This is before like YouTube. So YouTube today is huge, right? You can go on YouTube and there's trading videos, and TikTok has videos, and Twitter has videos. Back in 2007, I was 20 years old. I didn't know where to find information. Okay. So all I knew, and I was, bright-eyed back out of going to college, is I want to be a trader. I want to work on Wall Street. So in 2007, I worked at Charles Schwab. I was kind of doing some things, started a little small printing business on the side, and the markets kind of crashed. And all the internships that I had lined up for jobs on Wall Street, it was done. Okay. And I didn't go to like an Ivy League school. I went to Arizona State. I didn't come from like a super wealthy family, so I didn't really have a lot of the nepotism that really on Wall Street is really there. And I can kind of talk to it, later if you guys have questions, but it was hard to kind of make my way. So I used to post in this trading forum called EliteTrader.com. I don't know if you guys have heard of it, Elite Trader maybe, but I used to post like my thoughts on there through like a fake name when I was really, really young. And somebody found me and goes, hey, like, I really like what you're saying. I run a trading firm in Scottsdale. And I go, yeah, okay, let me, it's internet, like, he's stranger danger, right? So I didn't know if this was real or not. I kind of told my dad, because I was young, I was like, hey, look, like, all my job options are out. This guy says I could trade at his firm. He's like, yeah, it's internet. Like, let me go with you to this meeting to make sure this isn't sketchy. Okay. So I go there, it's fully legit. The people I learned from my first mentor were former floor traders from the CME. Okay. So they traded along the lights of like Michael Marcus's, Bruce Kovner's, all of the old school, late 80s, early 90s price action traders. This framed my entire worldview of trading in markets. Okay. I tell this because how I look at the markets, my rules, my philosophies, even though I left this firm after a little while and traded at different firms, the foundation of how I do things was all built here. And that foundation was built off of price action trading. And again, like you heard just before the prior speaker, I can't tell you enough how important that is to trading successfully. So in 2013, has anybody heard of Big Mike's trading forum? I think it's Futures.io now. I think the name changed. In 2013, I came back to Arizona after working for a family office, and I got an email. And somebody emailed me and said, hey, so-and-so says you're a really good trader. Can you teach me to do this? And I go, I'm not really a teacher. I don't know how to teach. I'm in Wall Street. I was trading for firms. I don't know how to do this. And he goes, look, I have like I think it was even GoToMeeting back then. I have GoToMeeting. Can I just watch you? And I'll give you money. Let me just watch you in the morning. Let me see what you do and talk to me, and let me just ask questions when you're not in a trade. And I said, okay, fine. I was like, you don't have to pay me. Like, you're a friend of a friend. Let's do this. Okay. So I was kind of in between roles at that current time. So I started to teach him, and he's like, man, this is pretty amazing. I've taken all these courses. Like, he showed me the courses that he took, and I'm like, people really charge this much for these. He's like, yeah, like really, like, this is crazy. He's like in his 50s, and he's like, I've done this. I'm trying to figure it out. Like, I'm struggling. And he goes, I have all these guys that follow me on Big Mike's trading forum. I have this huge thread, and I journal my career. I mean, my journey of trading futures. Can I tell them about you? And I go, yeah, but what am I gonna, like, I don't have a course. I don't have it. And he's like, well, look, let them just come in like I do with you now. I promise they won't bother you, so you can focus and just make videos first at the end of the day. And you'll see that like what you've got is like a skill to teach people to do this. So anyway, they come in. I teach them, and these guys, all same situation. I put them in a Skype group. They're like, look, we've taken all these courses. This all makes sense to me, like whatever. So that was kind of the start of me getting into the education space. I never intended to do it. And in 2014, I was at a hedge fund. Part of my deal was I was like, look, I'm kind of testing this on the side. If you guys don't mind, like part of my deal with you guys is I got to keep doing this on the side because I kind of like it. And it took off. It took off a lot bigger than I thought I was going to do. And then we put an office in Vancouver, Canada, one in Scottsdale. And then in 2018, I sold it to an investor. They changed the name of it, and I consulted to them for a little bit. And it kind of became more of like a very beginner education, which I'm not saying what I do is not beginner, but we really dive into a lot of cool concepts to teach people to really do this, okay? So in 20, I took some years off. So she kind of asked, you know, when I started it, I took some years off, okay? So I've been an entrepreneur, like some of you folks may be. I took a golf company. If there's any golfers in here, we had this really cool golf company called Jack Grace. You could change the saddles on them. I took it out of bankruptcy. We were working on it. And again, I started getting people again messaging, hey, Dan, are you still teaching? I follow your YouTube. You haven't posted in a few years. You know, what's going on? And I go, yeah, you know, I might teach. I moved to Puerto Rico part-time. That's a picture of me there. So I live part-time there and part-time in Phoenix. And I started investing in farms, okay? So I started making YouTube content again, and people came back and they're like, look, I want to learn from you. And that was kind of the story of this. And I want to start it there because I think story is important to talk about because like I said, it gives you a framework of how I teach people, and I think it's good to know, you know, who I am. So that's a quick background. I'm going to get into a few things. I have a YouTube channel as well. It's called youtube.com, The Long Vol. I love volatility. I love it when markets move a lot. I have a lot of content on the YouTube channel. You guys can watch there as well, but I wanted to put that. So let me just ask a few questions. I know I can't see them, but towards the end, I just want to go through a few things here before I start. So how many of you have gone through this? I want you to think about it as how many of you take more than 5 trades a day? Okay. How many of you trade every single day? You come in and you're looking for trades every single day. You know, how many of you made a lot of money and you like give it back? Trust me, it's not fun. I've been there. Even in 12 years of doing this, even trading at big firms, I've lost really big trades and I made some really, really bad trades too. Okay. So, and again, I don't want to mess with this too much, but how many of you gone to like live trade rooms where it's too hard to follow? Okay. Now, the reason I bring this stuff up is when I first got into this space in 2013 and 14, I didn't know what I was doing as a coach. And I would take a lot of feedback from students because I was like, hey, teach me how to teach you because I don't have any idea. Just like when I was a green-eyed, you know, wet behind the ears at the prop firm, I didn't know what I was doing. I didn't know what Fibonacci was. I didn't know price action. I knew none of it. Okay. So when I came into this space, I would ask these guys, like, where are you guys struggling? Okay. Like you understand like price action, Fibonacci, but why this struggle? Right? Why are we having issues making money? So I really started to dive into it, and it kind of became this little like, you know, the entrepreneur side of me, like, how do I fix something and make it better? So I started to ask a lot of questions. And what I would see was a lot of these traders that I first taught, okay, they were scalping too much, or they would make like 5 or 6 grand and they'd give it all back, or they would sit there and every day was like a trading day for them. Okay, and I'll tell you from my perspective, at the firms I was with, when I was managing a lot of capital and putting, you know, 100, 200 lot S&P contracts in play, I promise you this, we weren't trading every day. And just like the last presenter said about, you know, the Wall Street guys doing this, the way we traded then, it was not scalping markets. Today, like today, with S&P is down or NASDAQ is down, today's like today is like where guys like me used to come out and play in the markets. Because these large moves in the markets create a lot of money and a lot of volatility. It's not from scalping in the markets. And so this is where I started to gain a lot of insight to the retail trader. That's why I started the story of this in my background, because again, without that experience of working with the first group of people I ever did, I never would have known the struggles to learn how to help people to progress in their futures trading careers. So over trading and scalping is really the Achilles heel. So if you've done it before, look, there's an easy fix for it. It's not, you know, we're not going to build atoms at CERN here. It's really simple to fix this. I like to take a simple approach to things. I don't like complicating it. I'll even show you my price charts after this if you guys are at all interested. They're the most naked, quote unquote, price charts you'll ever see. It's so simple. There's no indicators. It's really straightforward once you understand a few things. So this is not strategy talk I'm going to talk about today. Again, I have a ton of stuff on the YouTube channel. You're welcome to watch it. I'm going to give you an offer out then, hang out with us for 30 days in our room and see what it's about. I want to talk about it from this perspective, okay? I've done this for so long to teach people to do this, and I took a genuine interest in people's success. I could teach everybody in here 20 strategies. I mean, tomorrow you could spend a week with me and I could teach you all-time high breakout strategies, scalping strategies. If you wanted to, I could create a gap strategy. We could go whatever. But if you can't actually apply that and make money, it doesn't make a difference. And that really is a game changer in doing this successfully. And for me, in my professional career, it made a difference. Also as a coach of helping people to do this, this is the difference maker. So on our YouTube channel, this is why I directed it to you. I don't know why this video never got more views. I just posted it a few weeks ago. If anybody's ever heard of Apex Trader Funding, I just had a few of our students go through there. This particular gentleman's in his 40s. He's been trading with me for 3 years. He has his own money. He's made some money before, but he goes, look, I'm going to go and see if this is for real and test this. Okay. So they actually funded him. This is in end of April. He's up 17 grand in real money. As of literally yesterday, he's up about 40,000, like legitimately. And as I give you an offer to go at the end of this and hang out in our room, you're going to see traders that make $1,000 a week doing this and some that put up like numbers like this. And he's not the only one. The reason I bring this up isn't to brag. The reason I'm bringing it up is when you go and watch this video, if you have time, you're going to see that price action led to this. And price action, when the way he trades, is not from scalping. Okay. And I talk about in this video specifically, and there's plenty more on the YouTube. The larger dollar trades come from, again, in my experience in doing this and teaching people as well, from not scalping. Okay, number one, the stress from doing it is crazy. Trust me, I've been there. Probably in 2012, 11, when I was really trading futures, I probably gained about 30 pounds. I always make this joke because all I would do is just scalp, right? I left the firm in Scottsdale and I was working for another firm, but I was like trading too, and it just was way too stressful, okay? At least for me. So one of the fixes of this is pretty straightforward. And again, like I said, I'm not going to talk about strategy in this video. I'm happy to answer questions towards the end of this, but I want to keep this really kind of simple as we go through this. Number one is not trading daily. So I find that when people try to trade every single day, it's just detrimental. You don't have to trade every day. A day like today where the S&P is down like it is, or NASDAQ is down like it is, you can make enough money if you just ride those waves to make your entire trading month. Okay, so I have this big philosophy, and this is how I was taught when I trained, to stay away from stuff like that. Okay, the fix is real simple. You don't have to trade every day. Number two, you want to learn to tell when the market is going to be an inside day or a range day. I got rage there, but again, first webinar in a while. So you want to be able to determine that. Okay, every day in our room, we don't do a live trade room. I'm going to give you access to something, but today we talked about this and we posted like, hey, today's going to probably be a sell-off setup. You know, we can get short things. Okay, but being able to determine whether it's a chop day or a large trend day move is paramount to making larger dollar trades. And when you can determine that, you don't have to scalp the markets anymore. Okay, it's really simple in my opinion. Once you kind of change your perspective and are open to that change to say, look, this is real. Like there's a way to look at this from a different perspective. Okay, when you do this long enough, like I have, you're going to learn to sit down, look for situations where there's larger dollar trades. Okay, in my personal career, I love days like today. Legitimately, when setups like this happen, it makes my month. I want to ride those waves and make as much as I possibly can. So just like the prior presenter, again, I can't even argue with this point at all. Price action leads the way, right? Price action is everything that I've done in my personal career doing this. It's something I still do today. And I'm going to show you real examples as we go through this. I'm happy to show my charts later on this, but I want to walk through it. The way we trade is pretty direct, okay? Yeah, I use Fibonacci levels. I use candles. I don't care about small time frames. I care about large time frames. I'm telling you this from firsthand experience. Large traders on big desks that are trading futures don't look at small time frames, right? They look at large time frames. Weekly time frames and monthly time frames are paramount on things that we were trained to look at. These same concepts are the same concepts I've taught my students for the past 8 years, 6 if you count my 2-year little retirement. I use a concept called previous high day and previous low day. I understand where the ranges are in the markets because certain days like tomorrow, after today's sell-off, you're gonna have a wide trading range. Understanding how that trading range works, you don't even need Fibonacci or price levels. There's a one simple concept using previous high and previous low a day that makes all the difference. Then finally, obviously price levels, but I don't use price levels on just anything. It is super, I don't want to say subjective, but we use them on monthly and weekly time frame levels. Okay, we're not just going to go and draw time frames, or sorry, price levels on wicks or anything we want. It's a really direct way of doing it. Now here's the trick with this, and this is important. We don't just use one thing. How you look at everything in context gives you a picture of what the market's going to do. This is why I don't believe in trading indicators. I don't believe in, I've seen like dark pool stuff talked about in this education space. if you look at the market from this perspective, I don't care if you trade futures, equities, equity options, or Forex, it's all just a price on the screen, period. So doesn't matter what it is. Once you learn to read the market, you can trade whatever you want. So let me give you a perspective. And again, I'm happy to pull my charts up in a few, but let me give some perspective on this. If anybody just scalps futures before, even scalps FX, I've never traded Forex, by the way. It's never been my cup of tea. I'll talk about the markets I trade in a moment, but one of the things I never realized happened in retail trading was this. When I first taught the first group of folks from futures.io, a lot of these folks were trading off tick charts. And I go, really? They go, yeah. They go, I just look at this, and if it does this, I put a 2-point target here, a stop here, and this is my system, okay? And I'm not gonna knock trading systems, but if you can't be a little discretionary and learn to read something, you're gonna miss out on the market. So they would just trade off the tick chart, and they would miss the bigger picture of markets. So if you're just scalping all day without any context, on the left side of the screen, what you're gonna see here, I don't know if I have a drawing tool. I think I do actually, right? Left side of the screen, you're gonna see a 60-minute chart. This is a 512 tick chart. When we trade in the markets, even like days like today, and I'm happy to pull up the chart in a moment, I wanna see the larger time frame, the 60-minute, the weekly, the monthly, because if I just stare at this, it's like walking through the forest with a small little tiny flashlight. I can't see anything at all. I have to see where the flow is, where the market's turns are, so that when I come to this and place a trade, I know what direction I need to be trading in. This right here, multiple time frame analysis, makes all the difference in the world, right? It's not trading indicators, it's not software, I promise you this. It's multiple time frame analysis that makes the biggest difference in doing this. I don't care if I'm looking at S&P futures, Carvana stock, Tesla, Japanese yen futures, crude oil. It's all the same to me when I look at the price charts. That's a little bit of a skill that takes to learn. We teach people to do it. So let me try to go to the next slide here and talk about the next point, because I've got a limited time on this and I'll take questions. So one of the questions I asked at the start of this was this, is if you've ever traded before and you tend to like give the money back. Let me show you something. Again, like I said, I'm not going to talk about strategy, but let me show you something that helps a lot of traders in my experience of doing this, okay? I like to wire money out of the account. Now, the reason I do this is this. In 2017, I funded 2 traders as an experiment. Legitimately, I gave them my own accounts to transact futures. I told the transact risk guys, I go, look, we're going to set the risk to max, $600 a day they can lose. They can only trade 3 markets, oil, NASDAQ, and S&P. That's it. That's all I personally teach. And a few of them did really, really well, right? Or one of them did really well. The other one kept having an issue. Every time he would get the account to about $20,000, okay? Time immemorial on this, he would do this. He'd go 10 to like 17 or 18K. And what would happen? Back down. Every single time. And finally I go, look, the entrepreneur in me goes, all right, how do we fix this? He's got some skill, right? Obviously, because he's making, 10, 15 grand a month, but giving it all back. Sometimes during the week, he'd make like 10 grand, okay? But he's giving it back. What do we got to do to fix this? Number one, he was over trading, which I didn't really want to mess with him too much because, again, I had a business interest in him. I had 50% in what he was going to make, plus it's my money. So am I really going to argue with them that he's scalping too much to make the money? I'm not going to argue, right? If it's working, it's working. So I go, look, this is what we're going to do. Every time at the end of the week on Thursday, I don't care if your account's at 10, or I'm sorry, if you start at 10, which is where he was, and you get to like 14K or 20K, on Friday morning, I'm going to look and see, and I'm going to take the balance out. Plus, I'm going to give you $1,000 cushion for next week for your mental health, so you don't freak out when you trade. And we would wire the money out every morning. It got kind of expensive, but again, who cares? I'll pay the $40 wire fee. And we would reset his account on a consistent basis. Now, what this did for him, and again, it should help a lot that struggle in trading, giving money back or scalping, is this. It reset him for the week next week. Okay. How many of you opened a trading account before with like $5,000 and you're excited, you get into it, you might take some losses, or you build it up, you get to like 10 grand, you pull it back, you're like, it's annoying, I should have taken money out. Or you get to a certain point where like he did, he'd get to like, I can notice it in his trading patterns. I'd look at the data and say, okay, every time he gets like 18, 19 grand, he starts to try to push it instead of like, look, man, you just made $10,000 this week. Let's celebrate and have some fun in this, okay? So what this does is this. Mentally, when you start to make a lot of money, what I've noticed is this. You start to get a little more confident. You start to trade a little bit more. You start to break your rules. But if you reset the trading account to where it was plus a little bit of positive P&L, you stick to your rules and you help yourself from yourself. This changed the entire game for this particular trader. It's one of the same things I still use in my small account options trading account. I use the same concept. Because what it does is doesn't let you to gain confidence too much. Like, I've got the money to lose. I can afford one more trade, right? It says, no, I got to take a step back. I got to cash out from the market. I got to put that money to use. Then you're also going to treat this a little bit more of seriousness, which what I've seen, and it made a big difference in his trading. Okay, so let me go to the next one here on the slide and go to the final point. Because again, I got to keep time slow on this. I'm happy to have more of a discussion. I'm going to give you guys an offer to hang out with us for a month. But let me get into kind of how we trade, and I'll take some questions. So the same concepts that I'm talking about here, and I'm going to go through some slides and some charts in a second, is nothing has changed, okay? Since 2013, 2014, the same group of people that I've ever taught, the same exact philosophy has changed. And if you don't believe me, I'm going to show you. There's videos on my YouTube channel from me from 2014 that I kept. Go back and watch what I said. You're going to hear the same speech, right? Different, same speech as I would say, same song, different singer, right? But it's the same speech as I go through this. But you can see if this is something for you. So the trading concepts are simple. We want to trade less to make more. Number two, you want to understand your comfort zone. This is an important part of this. The way that I've taught people is this. Everybody's different. Some of you are going to trade 2 contracts. Some of you are going to trade 10. Some of you are trading with 20 grand. Some of you are trading with 5. But the way that we teach you with our price action concepts and the philosophies, it's moldable towards each individual. That's important to understand. I never realized that was important as a coach until about 4 years into being a coach. I had to realize everybody's personality was different. I had a learning curve myself. Number 3, weekly P&L goals matter. 4, it takes time to learn. Look, we accept it as a known and we work towards that, right? Our community is amazing. I've got anybody from financial advisors in there to people that run small companies. I mean, it's amazing the amount of people in there that work together to do this. Number 5, price action is all that matters to us. You heard it before, you hear it again. Price action is paramount in learning to do this. So I only want to focus on 3 markets. So it's a little bit different from the prior speaker where I think he was talking about a few different markets, and I'll explain it here. Once you learn to do this, you don't need to trade every single market. It's kind of pointless. The company I sold to, they hired an instructor, and he worked at Online Trading Academy, which I'm sure a lot of you, for better or worse, might be familiar with them. The group that I was consulting to, I taught a few classes to them, and a lot of them were taught to trade like 15 or more markets. There's a big problem with that. If you can't trade 3 markets effectively, you're not going to trade anything else. There's enough money to be made on these 3 particular markets that it's pretty much direct for everybody. On that YouTube channel, there's a video from 2014. It's a live trade for me taking the Russell 2000. The only thing different from 2014 till now is I got rid of the relative strength. Okay, so I used to use this in my trading. I got rid of it entirely in 2015. But everything here that I talk about in this video on that YouTube channel, I mentioned at the start of this, you can go and watch. Listen to what I say if you're curious. The reason I'm doing this, I want you to see that nothing has changed in the style. The strategy concepts are simple. We use multiple time frame analysis, weekly to monthly candles, and we want to create situations where we call PTAs that helps us to stop impulsively trading or scalping. Okay, so again, every day we go into the market, I don't look at impulse trading. Right now in the S&P, I'm waiting for the markets here at about 15 minutes at 3:30. I think we're in a short-term buy zone for a bounce on the overnight session. Okay, but we know this stuff ahead of time. It's not like I impulsively trade this. And finally, we use Fibonacci. It's not a secret. I don't want to pretend like I've got some secret formula here. Fibonacci is widely used across professional traders, but all of it is used in context, not just as simple like you're going to buy here, put a stop here. It takes a little bit more than just that. It's not that simple. Okay, so that's kind of the strategy concepts. I'll go through a few things here. There's another video on the YouTube here. I'm going to kind of wrap it up and start taking questions. This was back from 2017. I'd look at this as well. This is me trading crude oil, and I explain literally, I'm trading this live. The same things I'm telling you here, you can go back and see. Now, again, I'm bringing this up because I want to show you that once you learn to do this with price action, multiple time frames, that it never changes. I promise you, it's going to get to a point where this becomes really, really boring to do. I know it sounds crazy to say, which is probably why over my career, I stopped to do other things, try to take companies out of bankruptcy and build them, okay? It does get to a point where it gets boring. However, boring is very profitable if you allow it to be. So let's go over a few things here. The way that I trade S&P is simple. If we can't get 10 to 30 points, I don't care about it. We don't scalp it. On NASDAQ futures, I want scenarios where we're getting 40 to 80 points. And I mean this on crude oil. I know it sounds crazy to say for seeing this. We look for $1 to $3 trades. If I can't spot a situation on oil where we're going to get at least $1 out of it, we're not trading it. Right. So when I say we're not scalping, I mean it. We're not scalping the markets. But what this means is you don't trade every day. Right? We look for really good setups. And again, they happen, especially right now in 2022. The Fed's going to continue hiking. The volatility is going to be here to stay. This type of volatility makes for what we do really, really awesome to trade. So there's another video I'm going to actually show you guys to go look at as well. This is a trader with us. He literally walks through everything I've just talked through. Our model, our system, our concepts. He was short this back in, had him create a video. Really, really smart trader. And if you listen to him, it's amazing here how he goes through his process. He breaks this down. This was a trade he was short both S&P futures, NASDAQ, and some S&P options as well. Okay. Again, I'm not showing this to brag. I'm showing this because I want to show you guys, once you understand a process, that process is repeatable over and over. And it's not just me doing this. There's plenty of people in our community doing this. So we have the Landshark futures trading program. I'm going to give you guys an invite, take questions to this. But before I do that, I think I've got like 5 minutes left here. So I want to open it up to questions before I get into anything else. I don't know if I can see them.
Yeah, you can't see them. Oh,
Okay.
I think I can make it so you can see them. How about now?
Sorry, one sec. Come here, you. How do I pop this? Oh, okay, there we go. There's quite a few of them. Okay, so sorry, let me try to answer. Can I have 1140? I think all of the above. Okay, no, this.
I
Every time I
usually
get to,
sort them so that the most recent one is at the top.
oh, okay. Let's see.
And they're asking if you could make your chart bigger. And Maurice said, that's me. Every time I get to a certain number, it reverses.
Yeah, for sure. Yeah. Yeah, I'm happy to do. Is it Forex only? So no, it's not just Forex. So the way I don't teach Forex in what we do. I've never taught Forex before. I just don't like those markets, honestly. We just trade S&P futures, NASDAQ oil futures. I'm really not a fan of the Forex markets.
Yeah.
How many screens do you need to trade? I mean, look, I've traded off a laptop before, man. You don't need a lot.
Yeah.
I mean, literally, I've traded off a laptop, honestly.
So everything below Maurice was someone, I think they were answering you when you were asking, have you ever done big trades?
Right.
So that, and then up above, Terry was saying, could you make your charts bigger? Sorry
Yeah,
about that, Terry.
look, I'm happy to, in fact, I could probably pull them up here quickly because I'm on a limited amount of time. You guys can still see my screen, right?
Yes. We can see your
Is it
slideshow now.
showing the
There you go.
charts?
Now it's
Right?
showing you charts.
All right, so this is, I mean, I'm going to give you guys an offer here in a second, but legitimately, this is what it looks like. There's nothing else to it. I mean, this is real time. Like, I've been waiting all day. I mean, we were short this morning a little bit. I didn't get all of it because I was busy doing other things, but this is what it looks like. Okay, I mean, there's nothing really to go. And I'll give you guys an offer at then. You can hang out with us for a month to do this. I mean, literally come and hang out with us and see what we do. So yeah, this is literally what it looks like.
How many screens do you need to trade?
How many screens? I saw that. Just one. But the rumor is if you at least get 10, you make more P&L. So that's the rumor. Do you use NinjaTrader for futures? No, honestly, I really don't like NinjaTrader charts. I shouldn't say that because they're our partner, I guess, but I use NinjaTrader to execute and transact futures, but I don't like the charts. Sorry, Ninja. Yeah, I've got a link I'm going to throw up here in a second. What's your definition of scalping? Okay, so I consider, it's a good question. So I consider scalping trading S&P for 1 to 3 points. I think that's dangerous. Yeah, I just think it's dangerous. 1 to 3 points is scalping. and taking more than 5 trades a day? And that's a really good question. You're defining that because everything in context is important. So yeah, look, I'll give you, I know I've got a few minutes left. Let me just go through the website's Landshark Capital / the top link literally says futures trading. You can click that there. The offer I'm going to give you guys is this. We have a guest pass that basically, and if you guys can see the guest pass sync, right? You should be able to see that. It says promotion. So normally this is $47. It's literally free. You guys don't need to pay for this. You get access to a futures 101 course, a 2-day live market. So I don't do a live trade room. It's too hard to do in my lifestyle. But literally, if you guys come with us for 30 days, you can hang out in our chat room. Those traders I'm talking about, they're all in there. Okay, you can ask questions, see them post P&Ls, charts. Then we're going to do a 2-day live market session. Not all day, only for about 2 hours. You can come in and watch literally live trades if we get the market set up. Okay. So you can sign up on the website. This is the link. It's Landshark Capital. Either use this code or you can just email me directly, whatever you want. Use either one. I'll literally get you in there in 20 minutes if you want. You can go to the Discord room. I know it's not super popular, but Discord was, everybody chose that. I wanted Slack, but they won. So
Discord is all the rage right now for almost every platform I work on.
Everyone, and I love Slack, right? But nobody wanted Slack. So I said, all right, you guys won. So, you know. Yeah, so that's the offer. I think I'm out of time, right? I'm about right on time, right?
Yeah, you're right on time.
Perfect. First webinar in 3 years and I got it done. So.
You did good. You did real good. I got somebody on here. ZJ says, you're awesome. Honestly is why people, your awesome honesty is why people want to work with you, is what is said.
For sure. I appreciate it. No, for sure.
Awesome.
I appreciate it, guys. Look, thanks for having me on. Thanks for getting me back out.
Thanks for coming. I hope you'll come back again. And folks, I put the link in the chat and I put Daniel's email address in the chat. And I think that you would be well served if you go and check this out, spend the time in the rooms, take advantage of the offers. And I mean, that's what this is all about, all this new information. Maybe it's not so new, but everybody presents it a little differently and everybody vibes with somebody differently than somebody else. So check it out. Thanks a lot, Daniel.
Thanks again.
Have a good day. All right, folks, here we go. And Simon Klein is waiting in the wings for me to do my work. There we go. Can you turn that down? All right, can you see my screen? Yes, that was Daniel Bustamante of Landshark Capital. You need to go and check that out. Next up is Simon Klein of TradeSmart. And Simon has been with us before, and I always like it when he comes because he brings something that people are not expecting. And today we're talking about mastering market tops and bottoms. And Simon's the CEO and founder of TradeSmart, TradeSmartForex.com, which has quickly established itself as a leader in trading education, training, and coaching services. TradeSmart is also a provider of market analysis services to professional traders and brokers. Simon is a professional trader and trading coach with over 15 years of experience. He has a passion for trading and loves to train and coach others, whether they are a complete beginner or a very experienced trader. Simon has taught and coached traders who work at the top Wall Street firms and other professionals from all over the world, including doctors, accountants, judges, lawyers, pilots, managers, and business owners. So listen up. I know he's going to bring us some good stuff. He graduated from University College London in '96 with a first-class BSc honors in computer science and began to work as analyst and programmer for Credit Suisse in both London and New York. And in 2005, Simon began his professional trading career as an equity trader for Generic Trading of Philadelphia after passing the Series 7 exam of the Financial Industry Regulatory Authority. Woo! Simon, are you there? Welcome.
Hey, Sherry, great to be here again.
How you been? Good to have you back.
Good. My voice was almost gone a couple of days ago, but it's on the way back. So it's
sounds like you
so.
caught something there that was trying to turn it into a frog.
Maybe, but hopefully it will last out.
All right. Now, you like your questions on the fly, or you like to hold them till the end?
Probably best at the end. You share the
Okay.
right screen. Let's
All
see.
right, you have the screen capability, and I will mute myself and you can take it away.
Let me see if I can get the right one. No, that's not that one. That's maybe one screen 3. Let's see if that works. You guys see my screen? See my cursor
Looks
moving?
like it. Mastering market tops and bottoms. Very nice.
Okay, laser pointer, almost ready to go. If you can put the chat on so I can see it as we go along as well, the questions, so I can see people's comments, because it's going to be a little bit interactive. Okay, hi everybody, ready to go?
Simon, you'll have to pull out the questions module if you want to see
Yeah.
what people are commenting.
Got them, pull them out. Yeah, got
Should
them
have
here.
it
So
there.
let me just pull them over so I can see them. Okay, perfect. Hey, Sammy.
We already
So
have a
Sammy's here.
recommendation.
There you go. Hey, Sammy. Who else do we have here? Leanne. You see if it's going. It scrolls from the top, yeah? The latest one's at the top. No, it's at the bottom. 1 second. Go down.
Well, you can click on the received, and you can click it so that the arrow points up, and then you'll have most recent at the top.
Okay, 1 second. I need to scroll to the top. Let's do that. Okay, got it. Sammy, Akira, good job. Yes. Great score. Okay, so hi everybody and welcome. Thanks, Sherry, for that great introduction. What we're going to cover now is a very, very important topic, and I'm very excited to share this with you. We are going to cover mastering market tops and bottoms, or another way of saying it is major turning points in the market. How do you spot it? And I'm going to show you how I spotted the top of the E-minis. I mean, very recently, how do we know it's a top, and how do we know we're in a downward moving market now before most people know what's going on? We're going to also maybe look at Bitcoin, how that topped out, and what you should and shouldn't be doing, and how you can use this in your own trading so you know when to get out of positions or when to get into positions. So everyone see the screen? So here's a picture of me giving a presentation not so long ago when we used to meet in person at the New York Traders Expo. And then I was invited to speak at the Bogu Investment Forum in China at the beginning of last year. And I spoke with other finance ministers of various countries, other professional traders and leaders in the financial industry. Quick disclaimer, you can read that. Just bear in mind everything we say here, I say is for educational purposes only. And you guys all know there's a high degree of risk involved in all types of trading. And I'm not responsible for your trading and investment results. Here's a little bit about me. Sherry already gave me a great introduction, so you can read that. Another little bit of information that you may not know, I'm probably one of the first people way back when to do a trading webinar before webinars were really known. And this was a very long time ago. I actually did it on investing.com. So I was one of the first kind of people to give a webinar about trading on that platform. So for those of you who are experiencing this for the first time, you can read about me, but just to know that TradeSmart is a trading education business, and we focus primarily on teaching you how to read the market professionally. That's stage one in learning how to trade if you're reading the charts, and how to run a successful trading business. So it's okay to, firstly, you have to learn how to read the charts, but how do you take that information and actually run a trading business? And that includes how to develop your own trading plan and strategies which fit your personality and lifestyle. That's the key. It has to fit you. So what I want you to do now is to really focus on what I'm going to cover over the next 35 minutes or so, 35, 40 minutes. And really, in this day and age, it's very easy to get distracted and multitask, which is not a good idea. Just focus primarily on what I'm going to cover, and you'll come away with something that you can use that's actionable in your trading immediately. Will make a big difference. if you always seem to be caught on the wrong side of the market at those major turns. So you're in the right place if you want to learn how to spot major market turning points and you want to get your answers, your questions answered later on today. We'll take Q&A at the end. So keep it simple. This is what I learned from Tony Robbins, who said, complexity is the enemy of execution. How many of you have, so many things and ideas going around, and, if this, if that, if this, and I need that, and that indicator, and this indicator, and it's so many complicated things. One says buy, the other one says sell, and you're like, oh, I don't know what to do. So if you keep things simple, it's easy to execute. Okay, and without execution, you're not a trader. You need to, see the market for what it is, understand what you're looking at, and then take trades based on your trading plan. But it's not simple based on lack of knowledge. It's actually masterful simplicity. It's simple based on a deep understanding rather than a lack of understanding. So when you first start trading, it seems very easy, doesn't it? And then things don't seem to work out as you want them to, and it starts to get complicated. But when you finally get back to success as a trader, it becomes simple again. So this is like kind of the journey you need to go through. It seems simple, so you're just buying and selling, and hopefully buying low and selling high, or selling high and buying low. Or you can also buy high and sell higher as well. If the market's moving up, you want to buy it, and as it keeps going, you could buy more. You can buy, and then eventually you sell. Yeah. So the idea is simple based on a deep understanding rather than a lack of understanding, and that's kind of what happens. Now, what I'm going to share with you now is based on many years of experience, over 15, 16 years of experience, and it's based over a decade of training other people how to do this too. And almost every single trader that I've trained trades differently, trades a different style. All the ones that are successful, they're successful in different ways. They've found what works for them within this framework that I'm going to share with you. A framework of reading the market, and a framework of developing yourself as a trader, of running a trading business. So let's go over professional chart reading. This is my framework for reading any chart. Now, when I first started out, I was taught to trade the New York Stock Exchange specialist system. So the specialist was the ultimate day trader. They had access to all the order flow. So what our job was to spot what the specialist was doing and do the same thing. So if the specialist was buying, we'd be buying. When the specialist was selling, we'd be selling. And I was taught to spot what was going on, what the specialist was doing, by watching the time and sales and the level 2 in the open book of the specialist. But what happened was the New York Stock Exchange went computerized, part computerized, hybrid, part computer, part human. So we call that disruption. The way I was taught to trade no longer worked. And ultimately, the company I was working for closed down, and I moved on to a different trading floor. So that taught me something. That taught me that my approach to trading needs to be timeless. I need to develop a way of reading the market that's simple, based on principles that will never change. For example, what I'm going to share with you now, supply and demand is one of those principles. Supply and demand has been around since the beginning of time, and it will never change. It is the reason why prices move in any market. Doesn't matter whether it's a financial market or the property market, any market. If there's more supply than demand, prices will go down. If there's more demand than supply, prices will go up. And no one in the world can argue with that, because that's a fact. So your job as a trader over here is to understand where supply and demand is in the market. But what else is within that framework is understanding how to read the trend using pivot analysis. Now that's understanding the pivots in the candlesticks. Okay, The next thing you need to understand in this framework is price direction analysis. Now, you can use this to replace everything you understand about candlesticks. The most important thing to understand is price moving up or down? And when did that direction change? So for example, if you're in a demand area in the market and the direction changed from down to up and you happen to be in an uptrend, wouldn't that be a great place to buy? And to be able to do this on multiple time frames. So this is the kind of timeless way of reading any market using candlesticks alone, Japanese candlesticks, the basic ones. No, not Heikin-Ashi or anything like that, just basic vanilla Japanese candlesticks like you see over here. And this is the key. Once you have a framework for reading, for analyzing the market, the charts are gonna teach you everything you need to know. The charts become your educator. You don't need any gurus or, you need someone to teach you how to read the market. And you need someone, to be able to show you the ropes. But once you've got that information, you need to go away and watch the markets and start to see what you see happening and try to understand why it's doing what it's doing in terms of supply and demand, in terms of the trend, and in terms of price direction. Where is price in respect to those levels? And then the markets will start to teach you. The charts will teach you what you need to know. You will develop your own unique edge in the market. I'm going to share with you a bit later on how one of my traders who I trained about just over 4.5 years ago, is now training other traders how to trade the NASDAQ at the cash open. She developed an edge based on supply and demand and really understood all those nuances of how the NASDAQ trades at the open within the first half an hour. And that's what she does every day. And now we have a whole group of people that have gone through her training and mentorship and are now doing the same thing and getting similar results, which is pretty amazing. So this is the key. The charts will teach you all you need to know once you have a framework for reading them. So these are the things that you need to ask yourself in terms of big turning points in the market. Okay, so everyone following, just type a yes in the chat area if you're watching this live, that you're here, you're still awake, and you're following, because we're going to get pretty detailed now. Okay. Thanks, Beverly, Kim, Ron. Good job. Okay, so these are the two most important things that you need to ask yourself: location and price structure. Because if you have the right price structure happening in the wrong location, well, it's not going to work. It's not going to give you the same odds. You need to have both. You need to be in the right location and you need to have the right price structure telling you what's happening. So you need to ask yourself, where is price and what is price structure telling us? So if you don't have a framework for reading the market, a strategy isn't framework. A strategy is how you take advantage of the market once you understand what the market's doing. And all the different types of markets you're in, you need to know how to trade trending markets, sideways, choppy markets, transitioning markets, decision-making markets. There's all different types of markets. You need to be able to recognize them and know how to trade them. The way you trade a trending market is different to a sideways, choppy market. So these are the two most important things that you need to ask yourself in terms of market tops and bottoms, in terms of trading, full stop. Where am I in terms of price? Where am I located? And what is price structure telling me? So I could be in a demand zone in a support area on the market, but the market's not telling me it's going up. So, I'm not buying until the market tells me, until price tells me what's happening. Price is your best indicator of what's going to happen in the market or what is actually happening right now. Remember, we have to trade what is happening, not what we think is happening, or not what we want to happen. We have to trade what actually is happening. Sometimes you might have a plan of how you're going to trade the market, and you think the odds are the market's going to do this, and it doesn't do that, it does something else, and you trade the other option, the other scenario. Plan A, plan B. Plan A you thought was a higher probability, but guess what? Plan B is how the market played out, so you trade that because you have a plan for no matter what the market does. And if you understand that, then it doesn't matter what the market does anymore. It matters what you do. So how does this relate to market tops and bottoms? So let me teach you the three main formations of market tops and bottoms. And we're not going to be covering gaps. And it's very important to understand, yeah, that you need to make this decision on the right-hand side of the chart as it's happening. Sometimes it's very easy to see it after it's happening. That was a market top, but you need to make the decision as it's playing out. So let me go over the three main formations. We're going to go over what I call the most common formation, a basing formation, and then a climactic formation. Okay, so let's go over the most common formation. So we need to know, where is the location? So usually this, price is at a significant level of supply and demand. You need to know how to recognize supply and demand in the market and where that is. And then you need to know, well, price is at that location, or price is at a new high or a new low. And then in terms of price structure, you need to wait for a change of trend. So let me show you an example of the most common formation. And this is using Bitcoin, how we called the top in Bitcoin. Now you can see this is Bitcoin not so long ago, and we had a big move up, and everyone remembers over here when the market made new highs. So when the market made new highs here, and it was almost at 70,000, I remember in the news, and people started talking, oh, Bitcoin's going to 100,000. So I'm like, I don't think so. Look at the market here. This is the daily chart. No, actually, this is the monthly chart, and this is the weekly chart. So we have this formation. Once price goes below here, I call this change of trend. I'm no longer going up. I just made new highs. Many times when the market pushes up to new highs, you get this move to the downside, but I don't need to guess it. I wait for the trend to change, and I know, I don't care what anyone else is saying in the world. I trust what I'm seeing happening in price action, and I'm saying, this is a change of trend. Everyone else is saying it's going to 100,000. I'm selling. And this is where we got the move down. And you'll probably notice that we also had another move down below here. The market turned here and broke. We can look at the live chart shortly. And we went down to 25, around the 25,000 mark, which was the next level down below here. And we knew that if market was going to come back down here, it's likely going to break. But the point is, this is catching the high. This is the absolute high of Bitcoin futures, and that's the end of it. This is where it turns and starts the move to the downside. So let me show you another example of the most common formation. So this is the dollar. This was at the beginning of 2021, I think, beginning of last year, or the beginning of. So we came down here, and I gave that presentation in China when this bar, it was in the beginning of, I think it was in January 2021. I think it was 2021. And what happened was, I said over on there, if we pivot here, this is the bottom, and we're going up to the 100 area. So this is exactly what happened. The market went up, it came down, and this is what I call a change of trend. We're no longer going down, and we're in demand levels at the bottom of a monthly base. And you know what happened? We went up, and we actually went above this area now. We carried on going up. The market, I mean, the dollar's been strong ever since here, since the beginning of 2021. So this is another way, I mean, this is another example of picking a bottom in the market once you know how to read the trend. Hey, Jane's here. Yeah, that. Good job. So Jane, she's in the audience here right now, and she was a trader I was talking about before who basically took these principles of supply and demand and applied them to her own market, developed herself as a trader, developed her edge in the market based on a framework for reading the market, and then started to see all the different nuances of the NASDAQ, of how the NASDAQ trades, and oil as well, but primarily the NASDAQ. And once you're very sensitive to that and you don't focus on anything else besides price, and how price moves and various other structures of price, then you can really become very good at it. If you're too diluted in and looking at too many different things, you'll never get good at anything. But if you're focused on one thing, price, you're going to get very good at reading price. So let's go over the second formation, I call the basing formation. Same thing again, remember, you need to ask yourself, where am I location-wise? Where is price? Is price at a significant level of supply and demand? That's what you need to ask yourself. Or is price making new highs or new lows? So it's at all-time highs or all-time lows. Then you need to look at price structure. So you want to see price basing at the highs and lows, followed by a bull or bear trap scenario. I'm going to show you an example, and this was how the E-minis, the S&P 500, we're looking at the futures here, put in a top. So I don't care what anyone else in the world says. Once I saw that, I said, this is the market top. And I said that to my trading room. Once that weekly bar closed, I said, this is the top for now, until proven otherwise. And this is what it is. It's a weekly chart. The market's basing here at the highs. Okay, this was the beginning of this year. And then the market, this is a bull trap scenario. When you break out to new highs and immediately come back into the base. Once this bar closed, I said, that's the market top. Until we take out the top, that's the market top. And look what happened. We went all the way down. We bounced, and you know what happened now. We've gone much lower. Moves up when you're no longer in an upward move market, you're in a downward moving market, are sellable. So this is another way of forming a top. Let's just quickly go over to live market now. And you can see this was the top. This is it here. So I marked in the top. And notice we came up and then we've gone all the way down. And today we had a big drop to the downside. And you can see, if you look at the monthly chart, we're no longer in an upward moving market, we're in a downward moving market. And let's go over the Bitcoin as well, since we've got the live charts up. You can see, again, this was the top of the market over here. And we've been going down, apart from this we tried to go up here and this failed. And then we moved to new lows. And you will see where we went down to. If you look left, you see there's a gap in the market here around the 25 area, and this is exactly where the market bounced. If we can't get back over here, the next level down is 20,000. If we don't get back over this level, it's probably going to continue moving down. Okay, let's go over the next formation. So this is a basing formation. Let's go over the final one, the climactic formation. Now, this is what you need to understand as well, the same two questions. Where am I location-wise? So this is what you need to be. You need to look at where price is at a significant level of supply and demand after a rapid move, an acceleration in price, a big momentum move. Momentum is the distance moved over the shortest amount of time, the distance on the chart, as in price. So price moves a bigger distance over a smaller amount of time. That's a momentum, acceleration in price. Or we need price at new highs or lows after a rapid move or an acceleration in price. So it's either making a significant, price at a significant level of supply and demand after a rapid move, or it's at new highs and new lows. So the market accelerates up to new highs or drops down to new lows. And then again, what do we need to see price structure rise to know definitely that's the bottom or the top is a change of trend? So let me show you an example of oil. Everyone knows oil. Oil futures went, I think it was minus $37 on the futures contract. This was, I think, last year. Actually, it was in 2020. It's like these past couple of years have kind of gone by extremely quickly. But here's what the example is. This is oil futures on the monthly chart, and we have this acceleration in price here. And then here we have a change of trend. The market comes up and fails to go down and turns. This is the bottom, and everyone knows, I said over here in my trading, and that's the bottom of oil. Time to buy and hold, bigger picture. And we can see where oil went well above. I mean, it was holding. This was, we can look at where oil is now. Let's get back to the charts. This was the bottom, and you can see we went all the way up, and kind of we're just chopping around here at the moment. So that's a climatic formation. Let me show you another example, and this was in the pound. Now, this was the kind of rapid move down at the beginning of COVID, the March kind of crash. This happened in March. We had this big move down and come up. Now watch what happens here in this, was a demand area, but we violated it here. But what we catch and put in a change of trend here, and that kicked off the move to the upside. And once we reach the top of this base, we've come all the way back down again. And let's have a look and see what happened. And that's exactly understanding what market you're in. You look over here. This is the bottom. And again, this was the top. And we come all the way back down to what may be the bottom again. So it's no surprise that you get this type of move happening off the bottom. We hit the first area and we bounced today. We've gone back down, and we may catch here at some point and go higher. That's what we need to watch out probably in the next few days. But you can see where we hit the bottom, this area of demand, and then we ran up to this area that we broke below, and then we got knocked down again. Downward moving market, which may turn to the upside again, but we need to wait for that. It hasn't done it yet, at least not on the bigger time frames. So there's a possibility it may drop through this. It's not a bot, it's at the bottom, but we need to have price action confirm, at least on the bigger time frames, to know. We can trade smaller time frame moves to the upside when it first touches the demand area down here. And again, watch how this happens. And this is a trade we called out in our trading room this week on Monday. You see, this is the move. This is the breakdown, the bear trap scenario down into demand and push up. Notice the change of trend here and the move to the upside. This is a big move. And then today we've come kind of all the way down again because we hit supply on the higher time frame. So that's how it forms when you get a big move down. Wait for the change of trend. Now, let me show you how it works on multiple time frames. Here we just looked at one time frame. Let's put two time frames together now. This is the Australian dollar. That's MTA's multiple time frame analysis. So we get this rapid move down on the monthly chart, and we're watching price action on the daily chart here. So if you know how to read trend, once we went above this line here at the high of this bar, we broke the downtrend here. And we're coming off demand. So I want to be on the buy side now. So I can buy dips into this area. I can buy this pullback over here to this level you see here and take this to the upside. But on this day, you could have bought this dip down intraday and traded this all the way back up again. So let me ask you a question. I think we've got a little bit of time. What markets do you want to look at? And again, anything I can chart, we can look at. So if you want to type it, if you're here live, just type it in the question area and we can look at one of your markets. You want to look at the E-minis, Kim? Okay, we can look at the E-minis. Tesla equity market. Okay, let's look at we've looked at the E-minis, but we can have another look at them. So the E-minis is, as we said before, if you understand trend, this is this on the monthly charts, and this move below here broke the trend. So this move up is into supply, is sellable. Now we're down here. Now we may get another bounce, or we may drop through this area, but we're in a demand area at the moment. Okay, so you can watch for smaller time frame. As you can see, we did have a move up earlier on this week, and from last week as well. So once you hit this area, you can see you've had a move to the upside. So you can watch this on the smaller time frame. You see we came down here and broke above this area, and that puts us in upward motion till we get to the next. Remember, we're upward motion in a downward moving market though. And you can use the same thing in this area today, the failure for it to go above this area. Look on a smaller time frame. Came down and we failed to go up. And then we tried again and failed. And then we just go all the way down again. There's no real notice. We bounce off the different levels on the way down, but we're still going down. And we've got another level down here. And we're into this one at the moment. Okay. Now if it doesn't hold here, we'll drop down to the next one. That's just the way the market works. Right, let's have a look at Tesla. So again, you see the same thing here. The market, the top of the market was here. This put in the top. When this bar closed, or you can anticipate here on a smaller time frame, we tried to go up here and failed. So this is a market top. So we come up, we fail to make a new high. This move up, you could buy, but it's not going to take out the highs. Unless it does, you expect it to make a lower high and come down and make a lower low, which is what it's done already this month below here. Now we've got this level to deal with. So every time in a downward moving market, when you hit demand, you move up and then go lower. Definition of a downtrend. So let me share with you, I know Jane's here, and let's go through this quickly. So I want to share with you how you can take the next step. And basically, it's very important to understand, as Jim Rohn said, for things to change, you have to change. So if you are doing something now, or you don't know what you're doing, you're not getting the results you want, maybe you're trying to learn a way of trading that doesn't fit you. So wouldn't it be a good idea to go back to first principles and learn how to read a market? And then develop something that fits your personality and lifestyle once you understand how to read the market. And to understand that, for things to get better, you have to get better. You've got to work on yourself, but you've got to let your knowledge lead to action. So you have to take action. You can't just, have nice ideas. You've got to do something with it. So the best thing to do is to have a framework to develop yourself as a trader and a framework for reading the market, and then go and put it into practice and learn through what works and what doesn't work for you. So we looked at that. So Jane's here now, actually. You can probably ask her any questions as well, or you can come and join. I'm going to share with you how you can join our trading community for free for a whole month. And then you can kind of interact with other traders and see how well we have a whole group of traders, a family of traders, and they're all trading together every day. And everyone's doing really well. So as I said before, Jane came to me with almost no prior knowledge of trading and went from beginner to consistent profits in 3 months. That was over 4 years ago. And now she's training other people how to do the same thing with what she's picked up in the market. I learned things from her as well. She's got, picked up the nuances of trading the NQ. So isn't that great that I can learn from her as well? That's the definition of a wise person, someone who learns from everyone. So I trained her, and now I'm learning from her as well. And this is what she says about the training. The first part of the training, and I'm going to share with you how you can do this. All I can say to anyone who wants to consistently profit, just do it. That training turned my whole trading around. From that day on, my trading has been so consistent, it's really mind-blowing. And people that know Jane, they're blown away by her, accuracy of trades that she takes. Once you understand the levels and can read the trend, you will beat the market every single day. However, the key is follow the pivot analysis, use the demand and supply levels, and adapt it to your own trading style. Be very disciplined. Don't be greedy. Stop when you've made your daily profit and you'll turn losing trades into winning consistently day in, day out. Simon's training can be adapted to any market. I mainly trade the NQ and CL. I use my own strategy based on Simon's education. I found the best thing was knowing what you're doing gives you confidence in your trades, and the fear of losing was gone. Trading had become a lifestyle, no longer a binary gamble or nervous hope job. Believe me, it's the best and only training to succeed with. And I can show you from today. Let me show you. This is part of our Discord server, and you can see this is people that have gone through the training. This was Jane's trade today. She got in on this move up here with a stop above there and rode this all the way down. This is on a 2-minute chart right at the open. I think she got in right there. And, this is our community of traders. So remember this, the best investment you can make in life is in yourself. So now you've seen a simple and powerful approach to picking market tops and bottoms. Take it a step further, and this is stage 1 or session 1 of how to read the market professionally, is learn how to read the trend using pivot analysis. And again, you can use that. I showed you a few examples of actually picking tops and bottoms in the market. And these are the benefits of knowing how to read the trend. You're trading the direction of the trend. The trend is your friend until the bend in the end. You'll know when a trend begins and ends, and make sure you're never fighting the trend. Make sure you're on the right side of the market. You can use it to develop a profitable trading strategy or enhance an existing trading strategy. So here's my offer to you, everyone here. And again, this is the first level. So join my How to Read the Trend training session, and you're going to get the trading room as well. And this is what you're going to learn: how to identify the current trend of the market. You're going to be able to analyze it in multiple time frames, exactly when a trend begins and ends, and how this knowledge will dramatically affect your bottom line. And you'll be able to watch us analyze and trade the live markets in real time. We have a live trading room, and you can come and join. You can join our community of traders 24/7 on Discord as well. And I'm going to keep this very brief. Tom says, I want to say what you teach and how to read the trend training is brilliant. Before that, I picked up bits and pieces from different traders, but was never joined up. Your course brought it all together in a very structured and algorithmic way. No guessing needed. The thanks jumped off the chart. And Matt, who found the trading room very useful. He's been trading for 11 years, and he's had far better results than anything he's ever tried before. Again, this is what you get. It's about an hour and a half, $397. It's on demand. That's the price of it usually. You can watch it as many times as you want. You get personal access to me. And again, the most important thing is you're going to get 1 month access to the live trading room for free. There's people paying $497 a month. There's people that don't even come to it live and watch the recording and use that to trade successfully from the ideas, and they're constantly learning and growing. And you get access to what I showed you before, our trading community 24/7 on Discord. And again, this is what it looks like. So here's the offer. The regular price is $894. If you join now, deadline's 2 days from now, you're going to receive $497 off, which is basically 1 month in the live trading room. And today, you just pay $397. It gives you a whole month. You'd have to make a decision whether you want to stay in the trading room after that. Entirely up to you. Come, try it out, and see if this can turn your trading around. Okay, learn how to read the trend. It will, you'll see it work for you. That's what that's what I say. Most people that have gone through it are amazed. I've had people that have gone through the training that have been trading 20, 30, 40 years. And people in institutional traders have gone through the same training that you can go through as well and take advantage of. It doesn't take long to learn. It takes longer to master it, but to understand the concepts and then come and see it in practice every single day. So there's a link to join. It's tradesmartforex.com/promo. That's with the number 4. So TradeSmart, TradeSmart, the number 4x.com/promo. And just to sum up quickly, the offer is how to read the trend, which is $397. 1 month and 9 trading room, 497, total 894. Go to here today, $397. So come and join, and hopefully this will be what turns your trading around or gives you a good start. This works, okay? All you need to do is make it work for you. Remember, this is a framework for reading the trend. It's how to read the trend, and you can apply it immediately to your trading and see it work for you. So questions, we can open up for questions. And again, just to show you very quickly, the website's here. Once you sign up, you click on members and it brings you to the membership portal here. How to read the trend is in here and the trading room is in here. Every session is recorded, so you can watch the recordings. And that is it. Let me see if we have any questions.
Let me have that link one more time.
So, okay, let's go back. Let's see. Whoops. TradeSmartForex.com/promo. There's another way that you can get it as well. You can get it from here.
All right, I put it in the chat.
So you come to this page.
Yep.
And take this opportunity, say thank you very much, Sherry, for having me here again.
Thanks
Thank
for coming.
you for watching this. There's a YouTube channel here if you want to join. There's some free information. Again, if you can sign up on my website. I hope there's what I gave over to you now will help you in your trading. If you decide that you're not going to do the trading, that's fine. But take what you've learned now and try and put it into practice for yourself to spot market turning points, major market turning points.
Yeah.
Go and look backwards in the market where the market, and then use it as the market develops. And if you see something, take a picture of it and say, this may be the market up, and then see how that develops. That way you start teaching yourself, once you've got that framework in place, how to read the market. And then you can start profiting from that. Okay, thank you very much, everyone.
Perfect. Thank you so much for joining us, Simon. And I hope your throat clears right up and that you're feeling good and that you'll be back again.
I did it. My voice lasted.
Yes, it did. It did a good job. All right, guys. Did everybody have any questions for Simon? Because if not, we're going to let him take the rest of the day off.
Thanks, Akira. Welcome, Jane, Akira. See, tell you something really amazing. Jane is now teaching. We have a course, Trade NQ at the Cash Open. Every time I do a webinar, she's heard this webinars for the past 4 years. This one since I first started doing it. She comes every single time. The odd time that she doesn't make it, she'll watch the recording, but she's already a successful trader. See,
she's learned how to learn.
You have to go over again and again and again. Repetition is key, but the right repetition. If you keep repeating the wrong things, you're going to ingrain in yourself doing it the wrong way, and it's going to be very hard to undo that. Right. This is the right way. It works.
All right.
There's many other ways, but if you want to be a price action trader, this is the best way to do it, in my opinion. Okay, thanks a lot, everyone.
Thank you so much. Have a wonderful day, and I hope you'll come back again.
Okay, thanks, Sherry. Thanks, everyone.
All right. I want to say thank you so much to our presenters today. What a great lineup, right? To everybody who attended today and stayed right through to the end, thanks for being with us. I would love to hear from you. Let me know what your big takeaway was. I'm at support@tradersexclusive.com. Again, we do have a recording that will be posted up on our website, tradersexclusive.com. And much appreciation to our presenters. They're bringing us cutting edge strategies for free. You're going to get email from them, so don't be surprised. And from me, your host, Sherry, and all of us at Traders Exclusive, I'm saying trade well, and we hope you'll join us next time for our next live event, which will be June 1st. All right, everybody have a great day, and thanks very much.